Okay, I think so. Let us start. Very good afternoon to all of you. Those who are, I think so, no one is aware. I am Karan Chandwani. I am associated with Symbiosis as a visiting faculty for the subject of taxes and accountancy since almost last 3-4 years now. I think so. For the first time, I'm engaging a bridge course for the first year accounts. So I spoke to one or two students yesterday to understand as to what exactly are you guys expecting. But the same question I'll repeat even now also. If any one of you, or maybe one by one, all of you, if you can just tell me what are you exactly expecting out of these 5-6 sessions, so that it will be, you can say, easier for me to discuss those topics also with you. So if you wish to tell something, please let me know. Else, otherwise, I'll start.
Sir, am I audible?
Yes, Vansh, tell me.
Yeah, so the basic theory is clear, but about the double entry and how to make the table
Okay.
is, yeah, that's the doubt.
Okay. Great. Anyone else? Okay. So let me tell you basically what I have planned actually. You can check at your end if all your expectations are getting covered or no. Otherwise, you can communicate accordingly, and accordingly, I can modify the session plan also. So for today, we'll start with the background introduction part as to what is business, what is accounts, etc. We'll move on to what are assets, liabilities, expenditures, and incomes. What is debit, credit? Why we follow double entry bookkeeping system? How do we pass the journal entries? Why do we debit a particular account? Why do we credit a particular account? How do these transactions affect the trial balance or the profit and loss account or the balance sheet, and in what way? Then we can move on to how is you can say, journal or a ledger, proper ledger prepared. How is a ledger account prepared, and how do we post the entries which we have passed in those ledger accounts? I'll also add a bit as to how practically the technology computers have changed the way we are using the accountancy techniques right now. So that also I'll cover in a bit, because practically whenever you qualify as and how you start using even bits and pieces of accountancy, maybe not directly relevant to you, but whatever you use, you will be using it in the digital era, not in the you can say the ledgers or books or registers. So therefore you need to have a bit of that knowledge also. So this is what I have planned to cover. We will go through various examples. We will solve few questions over here. We will write down few journal entries. We will make some accounts, etc. All this will be done in the sessions itself, right? So basically, when we say accountancy, it means we need to keep a record of something. Basically, when I use the word accounts, to keep a record of something, whatever is happening, right? It can be in a business, it can be whatsoever. So when we talk about ourselves as a student, suppose now you all are students, you all may be receiving some pocket money, maybe you all may be receiving some sort of income also, if at all, in some cases. So all this is your inflow, reduced by whatever expenses you are making in a day, be it you are purchasing some stationery, you are going to some sort of trip, etc., you're going to a restaurant, whatsoever it is. So all this excluded from your income, reduced from your income, you will end up with your profit, right? Income minus expenditure is profit. This is how you are keeping your record. So what is the net amount that I have in my hand at the end of the day is what you will be keeping accordingly. In the same manner, a business also keeps that. To understand debit and credit, to understand what are assets and liabilities, what are income and expenditures, first and foremost thing important is to understand what kind of transactions do happen in case of a business. Be it a businessman, be it a professional, a lawyer, a chartered accountant into a profession or whatsoever, the nature of transactions are very much important to understand, from which we'll be able to understand what are assets, what are liabilities, and so on and so forth. Then we'll be able to understand the double entry bookkeeping system, what should be debited, what should be credited. I think so. If possible, please keep today's session as kind of interactive. Please start responding as and how I start asking you the questions. We'll be having a small discussion for next 20 to 25 minutes. I'll be noting down few points over here. You need not write them down. So I'll be noting down a few points which will help us to clear our concept, which will help us to understand in a better manner what are assets, what are liabilities, right? Okay. So my question to you is, suppose you and me, all of us together, wish to start a business, wish to start a particular business, any business, ice cream shop, a factory, a pani puri ka stall, whatsoever it is. You and me, we have come together to start some kind of a business. What are the transactions or what all things come to your mind? Do not give it a thought. Whatever is coming to your mind, immediately you can just tell me, we can write it down. To start with, I'll just write down few points over here, couple of points. So maybe to start any kind of business, what we require is capital. Capital meaning funding, or say your own money if you have. Your own money if you have, or you can go for funding, you can go for a loan, you can get in partners, or your own equity, whatsoever it is. So basically, you do require capital, right? Another thing that I would like to write down over here is infrastructure. Infrastructure can be your own land, or maybe you can take some rent, you can pay some rent and take some land, etc. That can be also possible. So basically, infrastructure is required, right? What else comes to your mind? Yes, if you guys can please start responding. Whatever comes to your mind, you can just tell me so that we can note down these points over here and have a discussion on them. And then we'll classify these things into assets, liabilities, income, and expenditures. Yes, guys.
The team,
Sorry?
a team,
A team. Okay. So maybe I can write down manpower or labor. Manpower, labor, team. Okay. Just to discuss a bit on this topic. Yes, yes. I'll come on to that point. You meant what resources?
In general, whatever business you want to start must need
Okay.
basic resources.
ठीक है, ठीक है. So basically, see what I'll do is, all these are resources only. There can be manpower or human resources, you can say. There can be raw material, other few resources also. Before moving on to that point, let me talk about this particular part, labor or manpower or human cost or human resources. If you're aware, these are divided into three parts: skilled, semi-skilled, and unskilled. Can anyone tell the difference? Semi-skilled, unskilled, and skilled labors? What is the difference between them?
understand skill are those professionals we hire for the work,
Okay.
and unskilled are those like the masons we hire for the labor work, and semi-skilled are those whom we train for their betterment and
Okay.
the work culture.
Okay, okay. So basically, when I talk about a lawyer, a chartered accountant, an architect, a doctor, these usually come in the skilled category, right? They do have a
Yes.
degree, a professional qualification, as well as some basic experience. When we talk about interns, they do not have a degree also, but they are here to learn. So maybe say when you will be doing your internships in the years to come, semesters to come, so that will be classified as sort of semi-skilled, because you do have some sort of skills, some you are here to learn. When we talk about unskilled, maybe the peon, the maid, or you can say those people who are there in your office to make your office or infrastructure neat and clean, to keep it hygienic, all these people unskilled, right? So these are three categories basically which are used. As far as accounting is concerned, we account them as only one particular labor only, so it is everything under a manpower cost only, etc. Then yes, you can say other resources are raw materials. So whatever, say if you wish to purchase something, you will purchase it, maybe you will use it for further processing of your own goods, and you will produce your final goods, finished goods, and you will sell those goods, quite possible. Or maybe you will be involved into some sort of trading, you will just purchase something and you will just sell something, that is also possible. So raw material is there, and it may be turned into finished goods, and then these finished goods may be sold into the market. Yes, what else? What else? See, as far as infrastructure is concerned, won't a plant and a machinery be a part of it? We'll need machines, we'll need various assets, we'll need furniture, plant and machines. We will require these things, right? Chalo, what else? If you go and start a business, what are the things that you will require?
Customers,
Sorry?
customers,
Customers, okay. To reach out to customers, you may require various kinds of advertisements, marketing, sales techniques, etc. Right? So let us write down those also. So there is a cost which you are incurring: advertisement cost, marketing cost, etc. What else? What else?
If required, storage and transportation.
Correct. Okay. So maybe storage is there, or I can write down warehouse or go down. Transportation is there. Now see, in case of transport, I would like to further decompose this into few parts. See, one is your transport, one is travel, another one is conveyance. When I use the word transport, it is basically the goods transport, the goods that you are transporting from one place to another. You require some kind of logistical support, transport support, all this is under transport. When I say travel, maybe the owners of the business or the management or few executives, employees are visiting to some particular supplier or visiting to some particular customer, etc. But this person is far away. Say, for example, if you are located in Maharashtra, you may be visiting a client of yours or a supplier of yours in Kerala, for example. So in that case, you will obviously require travel, right? So this is that part. And when we talk about conveyance, suppose for example we are into a business of pizza and we are providing free delivery services, right? Domino's still provides some sort of delivery services on its own. So whatever this kind of expenditure you are incurring in your vicinity, or maybe say 10 kilometers, 12 kilometers from your particular place, this will be covered under conveyance. So when I say delivery, when I use the word delivery of goods, it can be covered very much in conveyance. But yes, when it is a fixed good which you are using to deliver, transport, right? Travel also I have cleared it for you. What else?
The license and permits.
License and permits. Okay, great. License and permits. See, there are some general license also which is required for each and every business. There are some special permissions also required. So if you are willing to sell some kind of you can say arms and ammunitions, in that case you will require separate license. If you are going to produce some eatables and then sell them, you will require FSSAI license, food this thing license you will require. So that is also there separately. If you wish to sell some medicines, you will require some pharma license for it, etc. So various kinds of licenses and registrations you will require. As far as taxes are concerned, etc., again you will require registrations. You will have to register in income tax department by getting the PAN card. You will have to register yourself with the Aadhaar also. You will have to register yourself under the GST Act also, Companies Act also if you are a company, and so on and so forth. So if you are registering here also, you will end up paying taxes also. Taxes are there. To manage these taxes and licenses and registrations, you may require some professional help also. So it may be a lawyer, maybe a chartered accountant, or any tax consultant, etc. Okay, what else? What else?
The brand name.
Brand name, okay. Brand name, goodwill, if you wish to purchase or you wish to sell your goodwill to someone. Okay. What else? Any kind of R&D, research and development? Yes. Whatever you wish to sell or whatever services you wish to provide, you will first analyze, research your market, and then accordingly develop a prototype. On a pilot basis, you can try it, and then you can finally end up with a conclusion that this is what I wish to sell and I'm earning so and so profits on this. Then you will develop a final product and you will start advertising for the same, right? So research and development. As far as accounting is concerned, research has a separate rule for accounting. Research costs and development costs are recorded separately. However, both are assets for us, not expenditures. We'll clear it out again when we further try to understand assets and expenditures. What else? You may end up applying for some IPRs, intellectual property rights, a patent maybe, if you have your own unique process, if you're using some unique kind of combination of technologies to produce what you're actually selling, can be possibly. Okay, have you heard about depreciation? Yes, anyone? Anyone? Depreciation?
Yes, sir.
Yes, can you please tell?
Cost reduce over time
Mm-hmm.
with factors. Like if you're using a machine over time, it will degrade,
Hmm.
and that reduces the value of the machine.
Okay. So
Phenomena.
correct. So basically, you all may be aware of this. Even if you go to a particular mobile shop and you just purchase a phone, you just step outside and then you step back into that shop and tell that I wish to sell this phone, I wish to purchase some another phone, which you have purchased just right now. Still, the value of that phone gets reduced. So value reduces over time. Value reduces because of some accidents, maybe. Value reduces because the technology has been outdated. There is some other technology which has come into picture, and so on and so forth. So decrease in a value of all these particular things is nothing but called as depreciation. So whatever machinery you will purchase will have a decrease in its value, 100%, right? Okay. What else? What about insurance? You may want to get yourself insured, your executives insured, you may wish to get your stock insured, you may wish to get your premises insured, right? So, for the insurance purpose, you will purchase some policy, you will pay some sort of a premium, etc. So, that is quite possible, right? Won't you require water? Won't you require power and fuel, that is electricity and maybe fuel for certain processes or maybe for conveyance, etc., right? As far as employees is concerned over here, that is the manpower, you will pay them some salary or maybe some wages. Salary and wages have different accounting treatment. We'll talk about them, right? So water, power, insurance, what else? Just tell me whatever comes to your mind. At the same time, if you have any doubts for whatever I'm discussing or writing down, you can please ask me. Be totally free, because we are not here in our regular lectures. In fact, we are here for our bridge classes. So it is basically for that purpose only, to have a clarity as far as the concept is concerned. Acha, what if you are producing something and you wish to sell it, but you require some sort of packing services? So maybe packaging and maybe labeling. Yes. See, as far as advertisement is concerned, we spoke about advertisement some time ago. Let me write down selling and distribution. Selling and distribution. See, whatever ideas you are coming up with and whatever is coming into my mind, I am trying to write all of those down in the accounting terminologies so that you all start getting familiar with the terms. Selling and distribution. As far as selling is concerned, it is up till the point of sale, till the customer comes to you and books his or her order, right? So basically your advertisement, your marketing, your other sales cost, all of this gets included in this particular thing. What about distribution? When I say distribution, it means after the sale. Once the order is booked, after that point of time, you start distributing. So it may include some conveyance, it may include some transport, insurance part also, etc. So that is taken care by the distribution part. Technical terms are selling and distribution. Both are two different expenditures, but both are expenditures. Okay, what else? What else? Will you require telephone? You may require internet, right? You may require a website for you. All these are your requirements, right? You may try to expand and roll out your franchisees, maybe. You may have your own branches, or you may have your agents and distributors, the whole network in place. Quite possible, right? What else? What else?
Brand,
Sorry?
brand name,
Banking.
brand name,
Brand name. Oh, brand we have covered already, no? Brand we have covered. Brand name, goodwill we have covered. Acha, I heard bank and bank is also there. So let us write down that also. You will require banking services to open an account, to have your deposits in place, for people to transfer funds into your account, maybe for some loan purpose, etc. Some small finance, maybe for some working capital. Have you heard working capital before this? See, working capital is basically day-to-day finance. You require money for your day-to-day operations, and this money is called working capital. So say for example, you are into such a business where the industry trend is to give your customers a credit of say 30 days. But your suppliers are giving you a credit of only 10 days. So you will get money after another 20 days. So for these 20 days to manage your operations, to give it to your creditors, to give the money to them, to pay it to your suppliers, you will need to have funds. That fund is called as working capital. You have specific working capital loans also available in the markets, right? You may have vehicles for your transport, for your deliveries, conveyance, etc. You may own some vehicles, possible, as we saw assets. You may be a member of certain organizations, so maybe membership and subscription. You may have some online subscriptions in place. Any subscription is possible, maybe for your staff, maybe for your customers. Your customers are waiting in the waiting room, you have some OTT subscriptions going on, that is also included in these subscriptions. So all sort of things. What else? Okay, someone had told me we require customers, right? Yes, here it was. So let me write this down in this way. You have suppliers also, right? You require suppliers from whom you will purchase, be it in case of manufacturing or trading, whatsoever. You require customers also, right? Suppliers are called as your creditors. Customers are called as your debtors. Debtors, why? Because they will be paying you the amount. They are owing you something on after the sale that you have made. In this case, you are going to pay them. So you are purchasing from the supplier and you will pay to the supplier. In this case, the debtor, meaning the customer, is purchasing from you and he is paying you back. So for you, this person, supplier, is a creditor, and so anyone who is giving you something for which you are required to pay him is your creditor, and opposite case is your debtor. So usually many people are confused who is a debtor, who is a creditor. So this was for them. What else? What else? You can have your stock in your godowns for storage purpose. So we saw storage. Let us write down stock also. Yes, someone is saying something. Yes, Khushi. Sorry?
So can you please explain creditor and debtor?
I'll explain. I'll explain. So stock is one point that we can write down. Coming back to debtors and creditors. See, suppose you are into a trading business. Very simple. Let us understand it by way of an example. You are into a trading business. You are purchasing mobile phones from a supplier and you are selling it to your customers. So this A Limited is suppose your supplier. This is your company, or I'll say write down my company, for example, my company limited, and let us have B Limited as a customer. Okay, you are involved into trading. You will purchase from this person, you will give it to this person. Okay, so you purchase say 10 mobile phones. You sold 10 phones, for example. A Limited sold 10 mobile phones to you. Not necessarily you will pay him immediately. Not necessarily this customer will also pay you immediately. Okay? Or it is quite possible they will pay you immediately and you can settle off the transactions, whatsoever the cases are. This person is a supplier, this person is a customer. The supplier is selling you something for which you are liable to pay. In the same manner, you are selling something to the customer for which customer is liable to pay you. He is owing the amount to you, you are owing the amount to him. This person is the creditor for you, is your creditor. Who is a creditor? Someone who sells you something, who gives you something for which you are liable to pay him the amount. Exactly opposite is your customer. So who is a customer? Customer is someone who is liable to pay you the amount. He is owing you the amount. He is called as a debtor. So in accounting terms, we do refer supplier, customer, consumers, etc. But ideally, the technical terms used are creditors, debtors. Creditor can also be your bank, who is giving you funds to use, for which you are paying them the funds back. At the same time, you are also paying them some interest. So you are liable to pay. Therefore, bank is your creditor. Your suppliers are your creditors because you are liable to pay them. At the same time, your customers are your debtors because they will be liable to pay it to you. Khushi, got it?
Yes, sir. Yes.
Okay, what else? What else? Acha, you may be required to give some sort of discounts, or you may be asking discounts from someone, quite possible. You may require to train your people, so training sessions. You might have heard about a CSR. Have you heard? Corporate social responsibility. If not, let us not discuss it right now. We'll keep it pending. We'll discuss it later on. Do you know bad debts? What is bad debts? Yes, anyone?
Yes, sir.
Yes, please tell.
Whether it's recovered about them bad debt.
Debts which are not recovered. Okay, so suppose, for example, just to explain to those students maybe who are not aware about this, now this person is selling 10 phones to customer. Say for example, the value of these phones is say 1 crore rupees, for example. 1 crore is the amount B Limited is required to pay to my company limited. So they both come under an agreement, mutually agree that on delivery of these 10 phones, B Limited will pay to my company limited 50 lakh rupees, and after a period of 20 days, they'll pay additional 50 lakh rupees or remaining 50 lakh rupees. Total deal 1 crores, 50 lakhs paid immediately on the delivery, balance 50 lakhs is given a credit period of 20 days. They mutually agree to it. Now, for this my company limited, this 50 lakh rupees is the amount which is receivable, which is to be received. There can be two cases. B Limited will actually pay the amount, B Limited will not pay the amount. If B Limited pays the amount, well and good, not a problem. If does not pay the amount, this is your loss. Why? Because you have sold the goods. You have incurred sales, you have sold the goods, your goods are gone. You won't be able to recover the money from it. The only way of recovery is to get a 50 lakh rupees in cash, which that person is not giving you, your customer is not giving you. So this was a debt which was supposed to be received by this company and was to be paid by the customer, but it is not received. It has turned out to be bad. It is called as bad debt. So this balance 50 lakhs, which the customer is avoiding to give or not giving, or he has turned bankrupt, for example, this 50 lakh rupees will be bad debts. Debt which has turned bad. Okay. So there can be bad debts also. I'll be talking about discounts also in brief, maybe tomorrow or maybe today only. Let us discuss it. What else? Will you incur repair and maintenance expenditure? Repairs and maintenance for your machinery, for your property, etc., whatsoever it is. Yes? Okay, what else? Acha, you will start receiving income, maybe the direct income from your business, your actual revenue. At the same time, you may start earning something which you are investing. You may start getting interest on it. You may start getting dividend on it. Right? Interest, dividend. What else? Acha, there is something called as capital gain. Are you aware about this? Capital gain. Are you aware about this? Yes, anyone? Let me give you one example. You purchased a computer on 1st of April 2021 for a amount of rupees, for an amount of 1 lakh, right? You sold this computer on say 31st of March 2022 for amount of 2 lakhs. Now this usually won't happen, but let us hypothetically assume. This do happens in case of bonds, debentures, shares, etc. The values increase, or in some other assets also. When we talk about computer, this usually doesn't happen. But just to explain you hypothetically, I have taken this example. You purchased for 1 lakh rupees, you are selling on for 2 lakh rupees. Now this increase, what is the increase? Increase in a value is how much? 1 lakh. On a sale of computer, you are earning a profit of 1 lakh rupees. This is ideally your profit, increase in value, but this is referred to as capital gain. You will refer it to as capital gain only when there is a capital asset. Now this is an asset. Basically, what is asset? Asset is something which will give you the benefit, which will pass on the future economic cash flows to you. So you can use that computer in your office and you can start earning income from it. Therefore, computer is asset, right? So if computer is your asset, there is an increase in the value of asset. If there is increase in value of asset, it is called as capital gain. And where is this used exactly? Now suppose, let us talk about shares. Reliance Industries Limited. You are purchasing one share, say for rupees 100, right? Say on 1st of April 21. This share will give you some sort of dividend. That is, Reliance will earn profit. Out of those profits, whatever amount of shareholding you have, you will get some certain amount. So say you are getting dividend of rupees 1, say on 30th of September 21. After some time, say in December, on December 31, 2021, you are selling the share. And the value is say 105 rupees. What is the increase in value? Rupees 5. This increase in value is called capital gain, and this is called dividend. This is also your income, this is also your income. Accounting treatment is different, tax treatment is different, but this is what capital gain is. So it is quite possible you have some assets in your business, you are earning some capital gains on it, some profits by selling those assets. Quite possible you may get some interest dividend also. What else? Anything else that you wish to tell over here? Nothing? Just go through whatever we have seen till now, what is required for us to open a business, to start a business. Just quickly go through. Do not note down anything, we are just discussing. So this was slide 1 wherein we saw capital, infrastructure, manpower. Then we went ahead with brand name, goodwill, transport, license, etc. We also saw insurance, power and fuel, packaging, selling and distribution. We came to internet, website, franchisees, branches, paying commission to our agents, vehicles, membership subscriptions, working capital. What is working capital? We saw the concept of debtors and creditors, right? We also have noted down these points: repairs and maintenance, discounts, stock, etc. Right? Any doubts till now, whatever we have noted down? Okay, now let me come to the point of assets. Asset, liability, income, and expenditure or expenses. Asset, liability, income, and expenditure. Can anyone over here tell me what is the difference between all of these? What is asset, what is liability, what is income, what is expenditure? Anyone, whatever you know. If possible, a non-commerce student who is not aware, but who can just guess what exactly this could be. Yes?
So assets are those that are of value, continuing value to the business.
Hmm.
Liabilities are those that are detrimental to your business.
Okay.
Income is the cash flow that you have that runs your business, and expenses are cash flow out of your business.
Cash flow out of your business. Okay, okay. See, basically, let me just elaborate a bit on this. When I talk about income and expenditure, income is basically whatever you earn by selling whatever is your business about, right? So if your nature of business is to sell, say, fruits, for example, the moment you sell a fruit, you earn something on it. That is your revenue or your income, right? What is expenditure? Expenditure is anything that you incur, the cost that you incur to make those sales. Simple. Whatsoever. It can be you have a property, you have a shop over there, you pay rent for that shop. That rent can be your expenditure. You pay taxes to the government, that can be your expenditure. You need electricity for your shop to operate in your shop, that can be your expenditure. Right? You are purchasing the fruits to be sold from the market, etc. That is your expenditure. You may have 1 or 2 people working over there in your shop, that can be your expenditure, right? So these are inflows, these are outflows. This is revenue that you earn from your business, and this is what you expend, what you actually incur, from which you get the benefit. You are using that benefit to, you can say, push up your sales. 2 things, simple things. So this is also called as revenue or turnover, right? Now what about asset and what about liability? Anything and everything that is giving you some benefit in the near future is an asset. Now there can be a confusion over here between expenses and asset. because expenditure is also giving us the benefit. We are paying electricity bill and we are getting the electricity, immediate benefit, we are getting the benefit. When we talk about assets, assets give us a benefit for a longer period of time. Assets give us a benefit for a longer period of time when compared to expenditures. Expenditure helps us to incur sales so that we can sell and we can earn from it. Asset help us over a period of time. Say for example, computer. Now the computer which is there in your office or in your shop, which is helping you to generate invoices, because people who are purchasing goods from you will require invoice. Now actually this is not helping directly, but this is helping over a period of time. It has a certain life, and throughout the life of that asset will help you. Can our customer be our asset? Yes, very much, because he is going to pay us the amount. The moment you sell something, up till a point of time he pays you, that customer is your asset because he will be paying you the amount. In the similar manner, when we talk about liability, we have taken the benefit from someone to whom we have not paid. So for example, when we talk about our mobile phone, if you have a postpaid connection, you use your mobile phone, you use your SIM card for a period of 1 month, you use it first. The moment you are calling your friend, 1 minute, 5 minutes, 10 minutes, 100 minutes, you have actually generated invoice for that particular part, right? But you are getting that invoice after a period of 1 month, and then you will be paying the amount. So you are liable to pay to your SIM card carrier the moment you can say incur the expenditure. So you spoke to your friend for 100 minutes, you are bound to pay the amount to that person. So you have created a liability. Right? So this is what is liability all about, wherein you will be required to pay to someone. So asset, liability, income and expenditure. Now these are further divided. Like asset is further decomposed or categorized into current assets and non-current assets. Liabilities again are current liabilities, non-current liabilities. Income, you can say direct income. There is something called as indirect income. When we talk about expenditure, again we have direct expenses and we have indirect expenses. Let me talk about these: current, non-current, direct, indirect. Please understand carefully. You can even note it down if you want to write now or later on. I'll take a pause after this. Current and non-current, or it is also referred to as, current is referred to as short term, non-current is referred to as long term. When I use the word short term, up till a period of 12 months. So if there is any asset which is giving you a benefit of up till 12 months is categorized as current asset. Any asset giving you a benefit of more than 12 months, for a period of more than 12 months, long-term asset or non-current asset. If you are required to pay to a particular person within a period of 12 months, current liability. If you are required to pay to a person after a period of 12 months, non-current liability. Let me give you some example. Your customer to whom you have agreed a credit period of 20 days or 1 month or 2 months or 3 months. Is he required to pay you within that period? 20 days, 30 days, 1 month, 2 months, 3 months, whatsoever. So these customers or these debtors are your current assets. Why? Because they'll be paying you the amount up till a period of 12 months. Or maybe your stock. You are into a business of fruit selling, ice cream selling, which are sort of perishable or have a limited lifespan. After that period, those goods are of no use. That stock is of no use. So this stock is only usable up till a certain period of time, which is within 12 months. Current asset. Non-current asset, for example, computer, which can be used for a period of more than 1 year, right? For example, any kind of machine, your phone, tablet, whatsoever. In the similar manner, when we say liability, current liability, your suppliers, your creditors, you are required to pay within a period of 12 months. Suppose if you have taken a special loan, a specific loan from a bank or MBFC or some individual or some business, and that person tells you to pay after 5 years. You will start repaying the amount of loan after a period of 5 years. Non-current liability. So anywhere basically you are required to pay the amount after a period of 12 months, non-current liability. Is the concept of current and non-current asset and liability clear? Please tell me yes or no, then I can move to income and expenses. All those who are attending the session physically, mentally present.
Yes, sir.
Yes, Khushi, Aditya. Okay, great. Let me come on to income and expenditure. When I talk about income and expenditure, two categorizations, so direct and indirect. My nature of business is, suppose, in this case, to sell cars, for example. Right? I purchase cars, I sell cars. I am a dealer, maybe, or maybe a second hand dealer, someone who is purchasing cars from people and selling it to other required people. Now, this is my nature of business. But is it necessary I'll receive income only from this particular type of business? Maybe I have earned so much that I have invested this amount in various shares, in various other ways from where I am receiving some regular income. Maybe I have one or two properties which is let out on rent and I'm receiving rental income. But is this rental income my normal course of income? No. What is my normal course of income? Whatever I get after selling a car. That is called as direct income. If I have a pani puri stall, I'm preparing a pani puri plate and I'm selling it to someone. I'm receiving 20 rupees, 50 rupees, 100 rupees. What is this? My nature of business? Direct income. This pani puri wala may also have invested in some shares, may also have a property which he has let out. Whatever amount he'll receive, that is income. You will pay tax on that, you will account for, but that is indirect. So whenever you are receiving something which is directly related to your nature of business, this is your direct income. Rest everything is indirect income. Some amount that you have in your savings bank account, you receive 10, 5, 7, whatsoever percentage of interest, 1%, 2%. All this is indirect income. That is income, but indirect, not directly related to your nature of business. Now, what about expenditure? Few students may have got the hint already. When I say direct expenditure, it means directly related to my nature of business. So, if I wish to sell something and for that sales, to make those sales happen, I incur some expenditure, direct expenditure, which is directly attributable to whatever you are selling. Example, I am selling pani puri plate. One plate of pani puri sold, 50 rupees income earned. Direct income, those puris, that plate, or whatsoever things that I have required, whatever I have incurred as expenditure will be direct expenditure. What about the electricity? Can you bifurcate the electricity? What amount of electricity, what value of electricity you required for that specific plate of pani puri that you have sold, for which you have received 50 rupees? Obviously, no. The labor who is there in your stall or in your shop, this person, whatever salary you are paying to him, say you are paying 10,000 rupees per month, can you exactly attribute what exact amount out of that 10,000 is being paid to that person for this one plate of pani puri for which you have received 50 rupees? No. Common expenditure. All these are indirect. Direct, which is directly attributable to a single unit that you are selling. The car shop example that we had taken, car dealer. If one particular car is being sold, what exact amount is attributable for that one car? Direct. Everything else indirect. So the electricity, the infrastructure rent, etc., indirect. You are not able to attribute exactly what amount is spent for particular unit that is sold. Yes, getting the point. So that is indirect expenditure. So that was asset, liability, income, expenditure, current or non-current, direct, indirect. I'll take a pause over here, quickly go through. Let me know if there is any doubt. If you wish to note down, take screenshot, please do it. We'll see one small concept after this and we'll stop. Yes, guys, any doubts? Are you able to follow whatever we are discussing?
Yes.
Yes, sir.
Yes. Meaning I'll continue the same pace for the next 5 to 6 days, whatever lectures we have. So if you wish to give me some certain feedback, please give it to me right now so that we can accordingly manage for our rest of the classes. If you will come on Saturday and tell me I did not understand a particular part, it will be difficult for me to cover again. Okay, one small question. Let us discuss that and then we'll stop for the day. Is there a difference between income earned and cash available with us? I'm writing it down. One word is income, another word is cash. My question number 1 for you. Question number 2 is there a difference between revenue and profit? 2 questions. Think upon it and please answer. Hi Aditya.
Sir, what is the total amount that comes into your business? The profit is the amount that you have left over after accounting for all the expenditures,
Okay,
whatever goes up.
okay, okay. What about the income and cash part? So as Aditya said, very simple. You have a certain amount, say that you have received from your client, right? Say for example, 100 rupees. You sold an ice cream, you received 100 rupees. You have incurred cost to produce that ice cream, manufacture that ice cream, or purchase it from someone, 60 rupees. Whatever amount is left, this 40 rupees is your profit, right? As far as accounting is concerned, we accounted in such a way. What about income and cash? Now my question is, this in this case, 40 rupees is the profit. Is it necessary that this 40 rupees you should have in your pocket? Is it important? Or you may have, you may not have. Yes, guys. I'll give you one more example. It is quite possible you earn 20 lakh rupees of profit, but you do not have enough amount to pay to your employees, that is the salary. Quite possible. Also, it is also possible you may have 1 lakh of loss actually in your business, but you have 1 crore rupees of cash available to pay to your employees, to pay to your suppliers. There can be a question how, right? Do you think the same? What I told you right now, is this possible? You are into a loss of 1 lakh rupees, but you have 1 crore of cash available with you. Or you have 20 lakh rupees of profit, but you have only say 10 rupees available with you. Is this possible?
Yes.
How?
Because sir, the cash that you have at hand does not necessarily have to come only from income.
Okay,
There are other streams, or also you start off with a certain amount.
correct.
And
So basically, it is also
after
possible that you may have taken a loan of 1 lakh rupees. So you have a loss, but you have taken a loan of 1 crore rupees and therefore you have cash available. Or you have sold goods to someone, but he has not yet paid you. So you have earned profit, but that profit is not yet available to you in the form of cash or in your bank account, etc. Quite possible. So income and cash, two different things. Income is the profit that you are earning. The profit that you have and the cash that you have are totally different. You start your business with some certain capital. That capital, because of that capital also you can have this amount. And because you have sold for a loss to someone, you can also incur losses. So loss is separate, profit is separate from what cash you have available, right? So this was one of the important points which will help us to gain a lot of clarity when we move into debits and credits, right? I have discussed a lot of things today. if you can just recollect them when we start tomorrow, well and good. I'll revise it in brief and then we'll move on to different concepts. Maybe tomorrow we'll move on to core debit and credit, right? So we'll stop for the day. See you all tomorrow. Take care. Bye bye. God bless you. Yes, very good afternoon, guys. Am I audible? If someone can just confirm so that we can start.
Yes, sir.
Okay, great. Chalo. So yesterday we have started the bridge course actually, and we have seen few things like what is the difference between revenue and profit, what is income and cash, and also we have understood what are asset, liabilities, income and expenditures, and how are they categorized with respect to current, non-current, and direct, indirect, right? Yesterday we had jotted down a few points over here. Let us go further today and try to understand whatever we have written yesterday. Out of these, what are assets, what are liabilities, what are expenses, and what are our incomes, right? Let us keep it interactive again if possible, as and how you can answer me, and I'll be discussing it accordingly, right? What about capital? What about capital? See, you have four options: asset, liability, income, expenditure. So we'll go one by one. Now say if first one is capital, so what it is exactly? Should it be an asset, a liability, or income or expense? What do you think? So you can just give me the answer and let us discuss. If it is right, I'll give some comments on it and we'll move on. If it is wrong, I'll discuss it with you and then we'll understand the correct option and then we'll move on, right? Okay. Chalo, what about capital? See, we have seen capital in the sense, say, suppose if I have a proprietary business, I am putting my money into that business, right? If I'm taking a loan, it is a loan, not a problem. But when I'm saying just pure capital, pure equity, that is my amount that I have put in my business. What should be this? Should it be an asset, income, expense, or liability? This should be a liability. Why? Because even though you are the proprietor and you are having a proprietary concern, a proprietary business, or maybe you are a partner, you are having a partnership firm, or maybe there is a company, you are the director, you are putting in some kind of equity over there, still that is your own personal money. Even if it is a proprietorship concern, still this money belongs to the proprietor and not to the proprietary concern or the business. For the business, it becomes a liability because the business needs to earn profit using this capital and then pay the amount back to the owner or back to the director or back to the partner. So capital is always liability. Capital is always liability, right? Many of the cases it is non-current because it is not necessarily paid within a period of 12 months. What about infrastructure? If it is your own land, asset, if you have taken a land on rent or some infrastructure on rent, in that case, there are two transactions happening over here. One is the deposit amount that you pay. Another one is the actual rental expenditure that you pay. Rental expenditure is your expenditure, indirect expenditure, because you cannot attribute the exact amount with respect to per unit what you are selling. What about the deposit? You are paying the amount of deposit to the landlord. So he has some security, some guarantee. And once the agreement is cancelled, he will pay the amount back to you. So for you, it is the asset. Why? Because you will get it at a future point of time. For that person who is the landlord, it is a liability because he is bound to give the amount back to the tenant. Getting the point, guys? Are you understanding what I am trying to discuss? If no, please let me know. Are you even present or you have just logged in?
We've understood, sir.
Understanding the point? Yes. Others? Khushi, Dheera, Arushi?
Yes, sir, understood.
Great. Chalo. So I'll move on with the same pace. If you wish to answer, please answer. Otherwise, I'll continue. Let me know wherever you want me to repeat a particular point or go in more details. Next we saw was resources. As far as salary and wages is concerned, see, salary is basically on a monthly basis usually, right? It is paid to the employees, to executives, whatsoever you can say manpower is present. At the same time, we pay wages maybe on daily basis, mainly to laborers who work on the production field, right? The main people. So when we are trying to attribute per unit cost, we will be able to attribute these wages. Not directly, but at least indirectly. How? I'll tell you, because say suppose for example, if some finished goods are to be produced, there are 10 laborers working on a particular product, say on a particular car to assemble it, etc. So you are able to understand that we are paying to these 10 people directly for the production of that car, and therefore these become direct expenditure directly for the production purpose. Salary is indirect expenditure. So say for example, we have an accountant, we have a lawyer, in-house lawyer, in-house accountant, we are getting all these kind of legal and accountancy work done from them. In this case, we are paying them salary. Now this cannot be directly attributable. It is quite possible 2 or 3 of the goods that you have produced does not require any sort of accounting, you can say treatments, etc. Just a normal thing. So how can you attribute per unit? So this becomes indirect expenditure. When we talk about salary, wages is direct because it is paid to the laborers, and labor directly work on the material which are supposed to be sold in the market. So basically finished goods. What about raw material? See, raw material you are purchasing and you are producing something. This raw material becomes your purchases. It is direct expenditure, directly related to your sales. You are directly producing your finished goods from that raw material that you are using. When we talk about assets, we talk about machines, we talk about furnitures, computers, vehicles. Vehicles also we had written somewhere. So be it furniture, be it plant and machinery, be it vehicles, right? Or any such sort of equipments, computers, all these are your non-current assets because they do have a certain life. So when you purchase a computer, it will not only give you a benefit of up till a certain, you can say 1 month, 2 months, etc. It has at least a life of more than 12 months. I'm not saying 5 years, 10 years, but at least more than 12 months, right? Be it 2 years, 3 years, 4 years, varies from product to product. Those are your non-current assets. What about depreciation? Reduce in the value of the asset. This reduction in the value of the asset is called as depreciation, and this depreciation is expenditure. Let me just explain you this concept in brief. See, suppose you are purchasing a computer. Life of computer is 5 years, right? You have purchased it for, say for example, 50,000, right? Now 50,000 divided by 5,000, we come to a figure of 10,000 rupees. So say for example, you purchased it in the year 2010, 11, 12, 13, 14. These are the 5 years the life of computer will be there. You are recording this computer as an asset, non-current asset, 50,000 rupees. 1st of April 2010. End of the year, 31st of March 2011, 10,000 rupees are deducted. Why? Depreciation. Because you have used the asset for a period of 1 year and the value has reduced. That reduction in value is recorded as expenditure. Now the value is 40,000. So 40,000 starts over here. Again, there is a reduction of 10,000, 30,000, and so on. Again, it will be 20,000, 10,000, and here it will be 0. Right? So you are using that thing for 5 years, and every year you are charging 10,000 of the amount as expenditure, as deduction, as reduction in value, as depreciation. 10,000 every year, the value gets reduced. Here it was 50,000, here it is 0. 10,000 every year. Understanding the point? Yes. So this is what is called as depreciation, and depreciation is an expenditure. At the same time, the asset which you are recording, that asset is your non-current asset. So you'll reduce that value and you will increase the expenditure. How actually debit credit is to be done, we will check it out. Do not worry. So that was depreciation for you. What else did we see? Okay, transport cost, again expenditure. See, as far as goods transport is concerned, directly related to the output. In that case, direct expenditure. These two very well indirect expenditure. This can be direct in cases where home delivery is given of some sort of goods, etc. In those cases. License registration, again indirect, not related to a particular goods. Taxes that you pay, again indirect. Professional fees that you pay to lawyer or a chartered accountant, indirect. Brand name, goodwill, direct or indirect. See, these are assets. These are expenditures. What we saw. This is asset. This is asset. Non-current. Because goodwill or your brand name, if capitalized, if calculated in terms of value and written down in your books of accounts, it will give you a benefit of over a period of time, more than 12 months, non-current. Research and development. Researching, analysis, etc. Everything is involved. Research includes expenditure also. It includes asset also to some cases. You might have heard about IFRS, or you might have heard about accounting standards. GFRS. GFRS is Global Financial Reporting Standards. IFRS is International Financial Reporting Standards. AS is accounting standards. We also have Ind AS in India, Indian accounting standards, which is derived from IFRS. So all these regulations, there are different regulations, different standards, which explain the treatment of various items in accountancy. Every country has their own accounting standards, depending upon their economy, depending upon their style and nature of businesses. But there are some common standards. Common standards say research is, say, for example, expenditure. But a few countries may say no, research is asset for us because you are researching and you are using that research for n number of years. So it is not you are getting an immediate benefit. You will be using it for a number of years. So you will consider it as an asset. Possible. Development. When we talk about development, you are actually developing a product. So even if it is a prototype, if its life is for more than 12 months, it is asset, non-current. Right? IPRs, we have seen the treatment given to goodwill, same is for IPRs, non-current, intangible assets. Right? Then we have insurance. Insurance, if it is for your stock, each unit, it will be direct. If it is for employees, if it is for business premises, indirect. Water charges if you pay, power, fuel if you pay, everything becomes indirect. Power and fuel can be direct if it is directly related to the output. So in cases it is direct, usually it is indirect. Packaging, labeling, again indirect. Selling, distribution, again indirect. Expenditure, all these are expenditures, right? Same goes over here also. Telephone, internet, indirect. What about website? See, in case of the website, you have monthly renewals, you have domain renewals every year, etc. So it depends. If it is on renewal basis, indirect expenditure. If it is on a long-term basis, 10 years, 20 years, you capitalize it as an asset. You can depreciate it if you want. There are rules for it, right? When we talk about franchisees, we start receiving income. Direct income, nature of business. We are receiving income for that purpose. Branches, agents, you may pay commission. That will become your expenditure. Direct expenditure. Whenever you start earning income from them, start earning commission from them, direct. Direct, if it is for your nature of business only, what agent, branches and franchises are doing. If it is any indirect thing, you have just invested in some agent or some branch or some franchise, you will record it as indirect income. Membership subscription, indirect expenditure. Vehicles we have already seen. Working capital is what? Capital only, basically loan that you are taking. Suppliers we have seen creditors, customers we have seen debtors. Debtors meaning asset. These are usually current assets. These are usually current liabilities. Why? Because it is rarely seen any supplier giving a credit of more than a period of 12 months to his or her customer. Usually it is within a period of 12 months. Therefore, they are current. Right? Bad debts will be your expenditures. Repair and maintenance will be your expenditures. Right? Training expenditures, again, they are expenditures. Yes, let us talk about discounts. Let me talk about discount. What is discount? Now see, when we talk about discount, what can happen? Number one is you are giving discount to someone. You are giving discount to someone or you are receiving discount. Anything can happen. Giving discount meaning say the goods are for 100 rupees. You have given a discount of 10 rupees at the rate of 90 you are selling. So this 10 rupees is your loss. This 10 rupees is your expense, direct expenditure, because it is attributable to per unit. Per unit is 100 rupees. You are giving a discount of 10 rupees expenditure. The goods that you are purchasing are for 100 rupees. You are getting a discount of 10. You need to pay only 90. This becomes your income. So if you are receiving discount, it is your income. If you are giving discount, it is your expenditure. There are two types of discount. Two types. One discount is trade discount. Another discount is cash discount. Please understand carefully. When I use the word trade discount, now suppose you visit a shop, you go to a supplier, he tells you that 100 rupees is the cost of this particular goods that you wish to purchase, right? You ask for a discount, then you finalize your deal. He says, I'll give you a discount of 5 rupees. At the rate of 95, you purchase. So 95 becomes the selling price and this 5 rupees discount is called as trade discount. This discount not necessarily needs to be recorded in our books of account. Why? Because at the time of sale, we are aware that the final price at which we are selling is 95. When we talk about cash discount is, suppose final selling price is agreed at 100 rupees. Credit period is agreed to be 15 days. Within a period of 15 days, the customer should pay 100 rupees to the supplier. Supplier is in need of money. Supplier goes to the customer and says that, please pay this amount to me within 7 days. I will give you a discount of 10 rupees. You pay only 90 rupees, but pay right now within 7 days. Please do not wait for 15 days as promised earlier. This discount becomes cash discount because it is given at the time of payment or at the time of receipt. Now this discount is supposed to be recorded in the books of accounts. Why? Because this 100 rupees is already recorded as sales in the books of the supplier. But what is the amount he is receiving against sales? Only 90. He was supposed to receive 100, but he is receiving only 90. So 90 received, what about balance 10? That is discount. Expenditure for the seller, income for the recipient. Guys, understanding this point? Please let me know if you have any doubt in case of discount, because this is what is required ahead when we start with the debit credit in some time today. So please check this out. Let me know if you have any issues in this particular part.
Excuse me, sir. Could
Ye-
you please repeat the cash part of the discount?
Yes, I'll repeat it. See, in trade discount, what we saw at the time of sale or purchase, the discount is given. Cash discount is given at the time of payment or receipt. Suppose you have agreed at an amount of 100 rupees that you will be selling the goods to some person, ABC customer. And a credit period is agreed to be for 15 days. The supplier is in requirement of funds. He visits the customer and says, you pay me the amount right now, I'll give you 10 rupees discount. That 10 rupees discount given at the time of payment or receipt is called as cash discount.
Understood. Thank you.
Okay. Next, we saw interest, dividend, capital gains. All these are indirect incomes, not direct, because they are not arising from your nature of business actually, right? Okay. Chalo. So with this basic idea, let us move on to one different part. I'll write down 4 cases over here. Let me start writing so that you understand what exactly I want to tell you. Number 1 is, you have made sales on 15th of March. You have sold some goods to someone on 15th of March. You received cash for it on 15th of March. Number 2, you have made sales on 15th of March. You have received cash on 15th of April. Financial year is changing. Number 3, you have made sales on 15th of April, but you have received cash in advance on 15th of March. Number 4, you have made sales on 25th of March and you have received cash before in advance on 15th of April or on 15th of March, sorry, right? In all these cases, what should be the date on which I as the seller should record my income? On which date? Let us go one by one. Number 1, I am making sales on 15th of March. I am receiving the amount or the payment by the customer on the same date. Should it be the date that 15th March on which I should record my sales?
Yes.
This is simple. Number 2, sale is on 15th of March. Cash received is on 15th of April. What should be the date of income which I am supposed to record in my books of accounts? Should it be the day on which I am selling, or should it be the day on which I am receiving the money against the sales? Please.
Receiving the money.
Receiving the money. Okay. Anyone else? Anyone else? No other answer? Okay, let us go to case number 3. You are receiving the money on 15th of March. You are making the sales on 15th of April.
So still on the day when you get the cash.
On the day means you will record the sales earlier. Before even actually selling, you will record the sales, right?
Yes.
Okay. Anyone else? Any other answer for number 2, 3, and 4?
Wouldn't that be incorrect for the third one? Because sale is being made later. A party could claim today that they want it and they could pay the cash in advance, and, and at a later stage they could say that now I do not need it, so return my cash.
Possible. So how can you record sales on 15th of March when you haven't actually made the sales? This can be a question. Okay.
Yes.
What about case 4? What about case 4? See, in number 2, I'll discuss all these 3 cases one by one. In case of number 2, ideally people record the sales on 15th of March. As per the standards also, we are required to do the same. Why? Because we are actually selling the amount, we are actually selling the goods, and the amount is due to be received by the seller, right? The customer is supposed to pay. The liability is created for the customer to pay because he has received the goods. So the moment we sell, we will record it as our sale. We will record it as our income, even though we will receive cash later on. Now there can be a question: what if the customer returns the goods and does not pay the money? We can accordingly record it as sales return. Or if he just disappears, he does not pay us the money, we can record it as bad debts. It was a debt which was due, but we did not receive it, it turned bad. Possible. We can record it as an expense. But the moment you sell it, we record it as income. Now there are cases wherein this does not exactly happen. People wait for money to be received and only then they record it as an income. Now why is this so? We have 2 different types of accounting that we follow. When I talk about accounting, we have basically 2 different types. One is accrual accounting, another one is receipt based accounting. One is accrual accounting, one is receipt based accounting. When I say the moment you sell, you record it as your income, is accrual based, because your income has accrued. It is now due that you will be receiving so and so money against the sale that you have made. And when I say wait for the sale, you will record a sale only when you actually receive the cash. That is receipt basis. In India, we are allowed to follow receipt basis for some people, for small businessmen, MSME sector, for professionals like you and me. In those cases, we are allowed to use the receipt system. But for big business people, for even not so big, but over and above the category of small businessmen, accrual system is compulsory. Accrual system is compulsory. So as per the accrual system, sale will be on 15th of March. As per receipt system, sale will be on 15th of April. As far as exam is concerned, as far as whatsoever things you are doing, or as far as practicality is also concerned, until and unless specified otherwise, accrual system is supposed to be followed. If you are allowed to follow receipt system, you need to first check whether you are eligible. Only then you can follow, provided you inform the respective authorities. Number 3, now what will happen in this case? 15th of March, you are receiving advance. So 15th of March, you will record it as an advance. Even if you are following receipt basis, still you won't record it as your income. You will record it only as advance, because that is advance. The moment you actually sell, you will record it as an income. And then you can adjust this advance against the income, not a problem. So actual date of sale will only be your date of, you can say, your income. In this case, what will happen? Same. Again, advance is supposed to be recorded on 15th of March, and income is supposed to be recorded on 25th of March. Is this point clear, guys? Will help us a lot to understand accrual system of accounting and double entry bookkeeping system once we go to that point.
Yes.
Please go through it. If you wish to note down, please note it down. I'll move to a different topic now. If there are any questions, please let me know. Okay. Now, whatsoever things we are going to see, debits, credits, ledger accounts, journal entries, etc., etc., etc. What will all of this lead to as far as a business is concerned? Because when we are talking about accounts, we are talking about business. You might have heard that there are some financial statements being prepared for a business. Some financial statements. And these financials or financial statements include few things, few components. One is your balance sheet. Another one is your profit and loss account. Third one is your cash flow statement. Let me give you a brief idea about what are these, and then if there are any doubts, we can discuss. Balance sheet basically gives us the position of our business. Position of business. Position of business meaning it shows us what is the amount of assets that we have with us and what are the amount of liabilities that we are required to pay to our creditors on a particular day. Position of a business on a particular day, and that day is the end of the financial year. So 31st of March of every year. The business prepares its balance sheet to show the position of its own business with regard to the assets and liabilities. So what is the amount of asset that I have right now? What is the amount of liability that I am required to pay in the upcoming year? As far as profit and loss account is concerned, we just show all the incomes and we show all our expenditures. As the name says, profit and loss, or profit or loss. So all your incomes minus expenditure will give you your profit, or if expenditure is more, it will result into loss. So all the transactions taken place during the whole year. See, this is on a particular day and this is during the period. So it is said during the period of 1st of April till 31st of March. During the whole period, whatever transactions have taken place, incomes or expenditures, you will write all of these down in the profit and loss account and take the difference. You get profit or you get loss. This profit or loss also goes to the balance sheet, which will show us the position. Balance sheet ka job is to show us position of assets and liabilities. Profit and loss ka job is to show us that what are the transactions taken place during the year, out of which what is the profit or loss that we have earned. And what about cash flow statement? As you can see the word cash flow, it basically tells us what is the outflow and what is the inflow of cash, irrespective of profit, loss, asset, liabilities. Just the cash flow. What is the amount that has been outflowed? What is the amount that has inflowed? Doesn't matter from what resource, etc. Everything is mentioned in the statement, but that is there. This is, I think, not a part of our syllabus, but I just wanted to put it over here so that you get a complete idea about the financial statements. Please go through. Let us quickly move on to the type of accounts. Any doubt till here? Okay. Now, before going on to the actual part of how we record the journal entries, we need to understand that whatever we have seen till now, as far as accounting is concerned, everything is classified into three different types of accounts. Three different types of accounts. Please do not note anything. If stop noting down if you are noting at all. Just pay attention. Please understand for next 5 to 10 minutes, and then I can give you time to note down things if you wish to, or take screenshots. So when I talk about types of accounts in accountancy, we have three types of accounts. Number one, real account or real accounts. We also have nominal accounts. And we have number three, personal accounts. Real accounts, nominal accounts, personal accounts. When we talk about nominal accounts, we have seen various accounts where incomes are involved and where expenses are there. All these expenditures and incomes are nothing but nominal accounts. So when we talk about commission income, this is your income. When we talk about our normal sales, royalty received, or whatsoever that you are receiving, interest received, all these are incomes. All these are incomes. When I talk about expenditure, say salary, power and fuel, telephone, electricity, whatsoever, all these are expenditures. There may be a question, what exactly is this account? When we say account, what exactly is this account? So basically, just try to understand, when I say telephone account, it is just a place. As for now, just understand, I'll clear this later on when we go ahead. Just understand, when we use the word accounts, suppose we have a book, we have a register of 500 pages in which we are required to maintain all the records for a particular financial year, 1st of April till 31st of March. Out of this particular register, which can also be called as a journal or register, one page is dedicated to telephone. So that one page becomes account. This particular page on which we are required to put down all the facts and figures as far as telephone is concerned, we will record all our expenditures. Say on 1st of April 2021, I paid a telephone bill to Airtel of rupees 200. Then say on 5th of April 2021, I paid to Vodafone a bill of 2000, for example. So you will write down all the actual expenditures that you have incurred on that particular page which you have allotted to for a particular category, say telephone. So this becomes account. What is account? Account is a place where we write down all the related expenditures for that purpose. So whenever you write down any sort of expenditure or whatever account or whatever page you dedicate for the expenditure purpose, this in short becomes a type of account, and that type is called as nominal account. So all your expenditures, all your incomes are nothing but types of one particular account which is called as nominal. When we talk about real account, basically all the assets, say your bank account, your cash, computer, vehicle, machine, all these are real accounts. What does this particular thing mean actually? When I say real, what does it mean? Real means we are actually able to see the movement of inward and outward. Now, when I talk about cash, I have 5,000 rupees of cash available with me, meaning I can actually count, I can actually see 5,000 rupees with me, right? Out of which 2,000 of cash was paid to someone for so and so purpose. You reduce it by 2,000. So you are able to actually see that the cash has been reduced. If you receive some money from someone in cash, you will again increase it. So you're able to see it is a real inflow, real outflow. Talking about machines, you have 5 machines in your factory. You wish to increase the machines by number of 2. You bring in 2 more machines into the factory. You are able to see the inflow. There is a real inflow. Real inflow, real outflow. These are your real accounts. Basically assets. Personal, where persons are involved. Your customer, your bank, your vendor or supplier or creditor, your employee, even the government. Wherever there is a person involved, the owner, capital, also is a personal account. There can be a confusion. Sir, you said bank account over here. You're also writing down bank over here. See, if you have an account in a bank where you have kept your cash, This is real account because you can see what amount is being deposited, what amount is being withdrawn. But if you're taking some other facilities from the bank, say credit card, loan facilities, other facilities, in this case, bank is a person who is giving you that facility. In the other case, when I was talking about this was not bank who is giving you facility, this was your account which is enabling you to deposit something, to withdraw something. So both are different things. When I talk about this particular point, that is bank as a person over here, maybe giving you a loan, giving you some kind of facility. Employee giving you some services, you are paying to him. Customer, you are giving him some services, he is paying to you. So there is some person involved. So personal. In this way, we can categorize three different types of accounts: real account, nominal account, personal account. Now there are some rules which are also called as golden rules of accounting. Let me write down those rules. Let us discuss them. Later on you can note it down. There are certain golden rules of accounting. To understand these golden rules, you were required to understand the types of accounts. Number one, what we have seen was nominal account, right? Nominal account. Rule for nominal account says that debit all expenses and losses and credit all gains and incomes. So there is a debit thing given over here, credit thing given over here. Next one is real account. Real account, the rule for real account says debit what comes in and credit what goes out. So again, there is a debit over here, there is a credit over here. Number three we saw is personal account. In case of personal account, the rule says debit the receiver and credit the giver. So again, there is a debit effect, there is a credit effect. Please let us try to understand these points now. When I say nominal account includes all income and expenditure, you can see all expenditures are supposed to be debited, all incomes are supposed to be credited. Sir, but what exactly is debit and what exactly is credit? It is as good as addition and subtraction, what we do in mathematics. So addition and subtraction is just a function that we are applying on some certain things, on some certain objects, some certain numbers. In the same manner, for certain transactions and accounts, we are applying some function which is named as debit and credit. It is just a name given. Okay, just a name given, debit and credit. When we actually solve few questions today, you will understand that debit meaning we are adding something to someone or some account, or debit can also be reducing something from some account in some cases. So you cannot directly define debit means plus, credit means minus. Nahi, aisa nahi hoga. In certain cases, debit is plus, but in certain cases, debit is minus. So why this and what this? That is the magic of accountancy. Not magic, I would say. That is the challenging part of accountancy, you can say, for now. So whenever there are expenses, you debit that particular account. Whenever there is income, you credit that particular account. How, what, we will see. I have told you in real accounts, mainly assets are involved where we can actually trace the inflow and outflow. The moment something comes in, you debit. The moment something goes out, you credit. When we say personal account, a person is involved. There is someone who is receiving or there is someone who is giving. So who is the receiver? Who is receiving? You debit that account. And if that person is giving, you credit that account. Understanding the point? Understanding
Sir,
the
I
point?
did not understand the personal account point.
Okay. See, in case of personal account, what we have seen over here, personal account is basically where a person is involved. Customer, bank, vendor, supplier, employee, owner, government, etc. whatsoever. To whom we are actually giving something or receiving something from. So you receive cash from your customer. You pay cash to your vendor, to your supplier, right? So when we talk about personal account, the rule says whoever is receiving the money or receiving anything, goods, money, whatsoever is involved in that particular transaction situation. Who is the receiver? That person's account should be debited. And the person who is the giver, who is giving something, should be credited. right? For a few students, you may feel that this is easy, but it is not that easy. Let us try to understand it. Now see, let me tell you the overview of what we are going to do. Just 2 minutes. Step number 1, what we will be doing is to pass down journal entries. This is number 1. Number 2, what we will do is to prepare ledger accounts. Number 3, trial balance gets prepared. Number 4, profit and loss account. Number 5, balance sheet. I am supposed to cover in the bridge course these 3 topics, that is journal entries, ledger accounts and trial balance. If time permits, which I think it will, I'll be covering in short profit and loss and balance sheet so that we can complete a particular course. And then maybe ma'am will carry forward from there. Journal entries manually needs to be written down in the journal. There used to be registers which used to come earlier. If you go back into the history, you might have heard about various people who are now called as accountants. Then they were called as Munimji, etc., who used to have a red kind of, you can say, a book or register with them, right, tied together, etc., a few pages tied in a particular register, and they used to open it and write down the accounts. We have sold so and so, we have received so and so, etc., 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 record keeping. Even today, there are many people who follow this traditional method. Even today, if you go to some rural areas, once you write down the journal entries, this is a separate register. Then there is another register which has various accounts, which I just explained. So one register of 500 pages, 2 pages, 3 pages, 10 pages dedicated to a single particular person or a single particular nature of expenditure or asset or liability or income. And that is called as account. So you prepare various accounts. Then after these 2 are done in 2 separate registers, you prepare a trial balance. Few people prepare it on monthly basis, few people prepare it on quarterly basis, few people prepare it on yearly basis. Once this is clear, once you are satisfied that the trial balance is correct, you move on to profit and loss and balance sheet. What happens right now? 99% of the cases, because of computer, because of technology, you need to pass down the journal entry. That's it. Real-time basis पे your ledger accounts get prepared. On a real-time basis, your trial balance, profit and loss, balance sheet gets prepared. So even if on 10th of a particular month, you wish to check out your trial balance, profit and loss, balance sheet, you will be able to do that. You need not separately prepare ledger accounts. The software does that. There are n number of softwares available today. N number of softwares. Few free, few paid, n number of softwares. You need to just pass down the journal entry. Just the journal entry. All this gets done automatically. So therefore, we will understand it in short what exactly these are as far as your exam is concerned, as far as to understand what exactly the computer or software does, because it is just programmed. This is where your mind is required actually to understand what is the nature, etc. A few months or years down the line, robots will start doing the journal entries also. Even today, there are certain sort of RPAs softwares which are doing that, certain sort of bots, but still this is sort of a you can say manual task, journal entries. So we will go through these one by one. Before that, there can be a question of many students, or maybe all, that we have just understood this, but we are not aware what exactly is to be done. What exactly is to be done? I have certain shortcuts for you in this case. They are foolproof. You can use it for your life also, not a problem. But at least for now, till you actually understand how are these rules applied in a practical case, you can follow that shortcut, mechanical shortcut. Up till then, once you are aware, you will find this easier. Right? Let me show you those things, and we will solve 1 or 2 questions using both the ways, using the shortcut, using the actual principles also, which I have taught to you. And then we can practice maybe on the basis of principle. So we have seen there are 4 different types of things basically. One is your asset, another one is your liability, then we have expenses, and then we have income. Let us prepare some accounts. I am drawing some format, some sort of T format. Now see, when we talk about these ledger accounts, which I was telling over here, traditional approach was to draw the accounts in such a manner, T format. So I'll just show you, say suppose this is your register in which you are preparing an account. This is one page of the register, say, or maybe you can use both the pages. You draw a T format. Write down the name of the account over here. This side is for debit and this side is for credit. DR means debit in short, CR means credit in short. Then you used to have date over here, particulars, amount. Again, date, particulars, amount. There was something called as LF also, LF, ledger folio, which was supposed to give the reference numbers. The way we have index in our books for page numbers, we used to have ledger folios for giving reference to different ledgers. So say I am writing down some transaction wherein cash is involved, and this name of the account is say bank. So where do we go to cash account exactly? So 2 was written over here, so ledger folio. So you need to go to the second account, etc., or second ledger, etc. So in this way the accounts are prepared. Nowadays also the format remains the same, but we also have a modern format which is called as the vertical format nowadays. If time permits, at the end we will see. Others I will not cover this part right now. We'll just focus on the concepts. Asset, liability, income, expenditure. Left side is debit, right side is credit. Left side is debit, right side is credit. The moment your asset increases, you had one computer, you are purchasing 2 more computers. You have 3 computers now. So from 1 to 3, your asset has increased. You will debit the asset account. You will debit the asset account. Just check, go to the rules. Asset or computer was a part of which account? Was a part of real account. Debit when the asset comes in. So when the asset increases, when the asset comes in, you debit that particular account. Is that the same thing that I have written? Which means if there is a decrease in the asset, you apply opposite treatment. There are only 2 treatments possible. So you debited when the asset increased. You credit when the asset decreases. Let us talk about liability. What happens in case of asset? When asset increases, you debit. Liability is exact opposite. So when the liability increases, you credit. And when the liability decreases, you debit. Now how? Let us check personal account. Personal account rule says debit the receiver and credit the giver. Debit the receiver and credit the giver. Right? Tell me one thing. When I talk about a liability, say you are the customer, you have purchased something from someone. You have purchased something from someone, right? From a supplier, from a vendor. Credit period agreed is 10 days. After 10 days, you are required to pay the amount to that person. After 10 days. For these 10 days, are you liable to pay him the amount? Yes. You create a liability. You create a liability. And therefore, you credit your account. We will see examples. Do not worry. In the similar manner, when we talk about expenses, what does the rule of nominal account says? Debit all expenses. So the moment you have expenses, you debit. The moment you wish to reduce your expenses, you credit. Credit all income. You will credit the income account when your income increases and you will debit when it decreases. So basically, if I talk about the manual or mechanical part, you just need to remember asset, real account, debit what comes in, credit what goes out. So debit what comes in, credit what goes out. As far as liability is concerned, exactly opposite. As far as expense is concerned, exactly same. As far as income is concerned, exactly same as for liability is concerned. So if you understand this part, or if you remember this part, you'll be able to remember everything of accounts. And this is the crux of accountancy, nothing else. We will solve few examples tomorrow, wherein I'll use this part or this technique also. I'll be going through this particular rules also and explaining you step by step how do we actually write down a journal entry. How do we actually debit a particular account? How do we identify what is the type of account and how do we debit, how do we credit? We will talk about this. Maybe tomorrow and day after tomorrow's lecture will go specially for this purpose. So Wednesday and Thursday, I guess. And then maybe Friday and Saturday, we can go on to the ledger accounts, trial balance, profit and loss and balance sheet. But this is the crux. If you understand this well, you will be able to understand everything. I'll give you just, I think a few minutes are left. You can either take screenshots or if you wish to note down, please note down. If you have not understood a particular thing, please let me know so that tomorrow we just revise and we start solving examples. There are 3 slides. I'll show it to you one by one. Please note down the rules and this shortcut carefully because you will be requiring to refer to it tomorrow. I won't be able to show you the question, answer, and this rules at the same time over here. So please note down or take screenshots so that you can use it tomorrow when we start solving the questions. Guys, any doubts till now, whatever we have discussed? Are you able to understand? What is the feedback?
Yes, sir.
Chalo, we'll stop here. Tomorrow we'll continue with the examples. We'll see a few examples. Maybe you will start facing doubts at that time and then you can discuss. Okay, we'll stop for the day. Thank you. Bye bye. Take care.
Thank you, sir.
Guys, are you able to hear me? Hello. Okay. So let us quickly move on to accounts part. I think so in the last session that we have had in the last week, I think on Tuesday, we have seen type of accounts. We have seen what are the golden rules, and we have not actually seen how do you apply them, right? So let us quickly revise this part and then move on to few questions as to how we actually apply these rules or do it with the another way that I have taught you and pass the journal entry. Which account is supposed to be debited, which account is supposed to be credited with whatever knowledge we have gained till now, right? So there are three types of accounts. We have real accounts, we have nominal accounts, we have personal accounts. When I use the word nominal, it relates to income or expenditure. Any and every type of income or expenditure account is what type of account? A nominal type of account. And the rule goes as debit the expenses and credit the income. This is what we had seen over here. Debit all expenses and credit all incomes. Number two was real accounts. Any account and every account which includes the assets, basically movement where we can trace the inflows and outflows, any sort of asset accounts. And the rule goes as debit what comes in, credit what goes out. We have seen examples, cash account, bank account. We have seen machine accounts, computer account, all these type of accounts. Wherever there is an actual person involved, an actual person is involved is referred to as a personal account. Actual person, right? Be it bank, customer, vendor, supplier, employee, government, owner, whatsoever, right? And the rule says debit the receiver, the person who is receiving something, not necessarily cash, anything, receiving the service, receiving the goods, debit that account. Credit the giver, the person who is actually giving it, right? We have seen that there are total 5 steps which are involved. First, you write down the journal entries. Next, you make the ledger accounts. Third, you prepare the trial balance to check the accuracy of whatever you have accounted for. 4, you prepare the profit and loss account to ascertain the amount of profit or loss. And number 5, you go to prepare the balance sheet that will show you the position of your business, right? As of now, when we are using computers and accounting, digital accounting, it is only the first step that we need to follow, that is journal entries. All of the other further steps are done automatically as per the algorithms designed in the respective softwares, right? We have seen the mechanical part also. If you're not able to understand the rules and apply them right now at this moment, though they are easy if compared to this, but still in that case, you need to just remember the asset part. So you prepare a ledger account in the T format, left side is debit, right side is credit. If the account is an asset account, in that case, whenever the asset increase in an asset, you need to debit that account. Okay, just remember the real account rule. Debit what comes in, credit what goes out. If the asset is reducing, credit the account. Exactly same for expenditure and exactly opposite for liability. What is for liability is applicable for income, or what is for expenses exactly opposite for income. So asset equals to your expenditure, same treatment, exactly opposite treatment for liability and income, right? Any doubts till now, please let me know. Else, I request each one of you to please take a paper and pen so that we solve few questions today. If you have not written this, I'll show it to you again. You please take these screenshots at least, because you will require to write them down. You will require these to write down the answers of whatever questions we solve. So please note down the golden rules. You can just take a screenshot. Do not spend time writing right now. Also, I'll show you the mechanical part also. Both the things. Let me know once done so that we move on to solving few questions. Yes, guys. I hope you are done with this. Let me write down 5 steps. Now see, steps to debit or credit a particular account. So these are, you can say, steps for journal entry. Number 1 is you need to classify the transaction into asset, liability, income or expense. Classify the transaction into asset or liability or income or expenditure. Once you are done with this, you need to find out number of accounts involved. Once you are done with the number of accounts involved, whatever accounts are involved over here, you need to find out the types of these accounts. Types of these accounts. Once you understand the type, after type is ascertained, you need to simply apply the rules. Apply rules. And number 5, you need to journalize. That means you need to write down the entry. As far as journalize is concerned, there is a specific format which is followed, which was followed earlier also in the proper Munimji format, and which is followed right now also in the digital format. We will see this later on. First, let us understand this part. Well, this is just a formality. Once you understand this, this is not a big task. So let us first go through all the 4 steps. If you do not wish to follow these steps, you can directly use the mechanical format also. I'll be explaining 4-5 questions using both the formats so that whatsoever is preferable for you, you can apply it, right? Chalo. So I'll write down one transaction. You try to apply the rules first. Just understand whatever steps we have written. If you have not taken the screenshot of steps also, please do it. Just try to apply. I know many of you won't be able to do it. I'll then explain it to you step by step. But you can give it a try first, because we have seen everything technically. How do we apply actually still left. So here goes the first question. You have a transaction where cash is deposited in SBI bank account. So you have one account which is with the SBI bank and you are depositing cash, right? I'll give you 2 minutes. Try to apply whatever we have learned till now. You have 3 screenshots with you, golden rules. What are the steps to apply those golden rules? And number 3 of the technical format also. Please give it a try. If you get an answer, be it right or wrong, please let me know in the chat box, or you can just unmute yourself and tell me. Yes, any answers? Is anyone trying to solve? Aditya is typing, okay. Yes, Aditya. Cash account is debited, capital account is credited. Okay, okay. By capital account, you mean to say the owner's account, right? So let us check out what will happen. Anyone else with the answer? Anyone else with the answer? Chalo. Anyways, let us go by the rules. Classify the transaction. Asset, liability, income, expenditure. Cash is deposited. It is your own cash. You're depositing that in the bank account. So when I talk about the nature of transaction, it is as good as cash is also yours. It is your asset. You will be able to use it. The amount there in the SBI bank account is also your asset. You will be able to use it. So one asset is decreasing, another asset is increasing. One asset is decreasing, another asset is increasing, right? Number of accounts involved. One account is your cash account, another account is your SBI bank account. There are two accounts, right? This is say account 1 for us over here. This is account 2 for us. Cash deposited. So your cash will get reduced. Cash in hand will reduce. And this amount you are depositing in the bank. Therefore, your bank balance will increase, right? So we have seen number 1, number 2. What are the types of account? As we discussed, both are assets. Quite possible, both are real accounts. So even cash is your real account and even bank is your real account, right? Both are real accounts. Apply the rules. What does the rule of real account say? Let us check it out. Real account says debit what comes in and credit what goes out. Whatever comes in, you need to debit that account. And whatever goes out, you need to credit that account. Let us try to apply. Now we have two accounts. One is cash, one is bank. Both are assets, both are real accounts. One asset is reducing, another asset is increasing. Debit what comes in. What is coming in? Bank balance is increasing, right? So you need to debit bank account. So say debit bank account. Why? Because there is an increase in the asset. Increasing. Credit cash account. Why? Balance is decreasing. Debit what comes in, credit what goes out. So from the pool of amount that you have as your cash, that is getting reduced. It is going out. So credit what goes out. Credit cash account. Yes. So first step was to identify what kind of transaction is this. Two assets involved, one is reducing, another one is increasing. Step number 1. Step number 2, how many accounts? Two accounts, cash and bank. Step number 3, types of accounts. Both are assets, both are real. Number 4, apply the rules. One account will be debited, one account is getting credited. Number 5, journalize. How do we journalize? We'll look at it afterwards. Suppose we go with the shortcut method. The moment you check out the transaction, cash deposited in bank account. The moment you check the transaction, you need to identify the accounts. One is cash, one is bank. Both are assets. What is the rule? What did we see? Increase in asset, debit. Decrease in asset, credit. Which asset is decreasing? Cash is decreasing. Credit. Which asset is increasing? Bank, debit. Without applying the rules. As simple as that. Understanding the point? These are the 5 steps that you need to follow, or 4 steps rather. 5th one is still pending that we need to see. And that was the technical method also. You need to just identify asset, liability, income, expense, and go to the technical part. Check out when to debit, when to credit, and directly write it down. Please note down this particular part. Let me know if you have any queries. We will solve 4-5 more short transactions, just one transaction over here. Then we'll go on to what is double entry bookkeeping system. And then we'll go on to how do you actually write down a journal entry, right? Please check it out. Please let me know if you have any doubts. If you're done with this, also let me know so that we can move ahead. Kushi, Shubhangani, are you able to understand things?
Yeah.
Okay. So I'll give you one to try. Just try it out. Obviously, I'll be explaining it in detail as we have seen this again. If you're not able to do it, if you're able to do it, also I'll explain that part. Just try to solve it yourself first. Purchased machine. Purchased machine for rupees 10,000 of rupees 10,000 from Mr. Supplier. Please try to solve this one. Cash account debit, machine account credit. Okay. Anyone else with the answer? Any other answer? Okay, see, let me explain one thing over here before moving on to the actual solution. The transaction says purchased. It only says purchased. Now, as Aditya has answered, that one account is involved over here is cash. So, few students may think that when we are purchasing something, we are actually paying also, right? You don't get anything without you actually pay, or you do not give anything to someone without actually receiving the amount. But please try to understand, as far as accounting is concerned, the transaction is divided into two parts. So when I actually say purchase, or when I say sale, this is on credit basis or on cash basis. When I use the word credit basis, it simply means that there are two separate things happening. One is the actual purchase or sale, and another one is the actual payment or receipt of funds. And when I say cash, it means it is purchase or sale plus payment or receipt together. This is together. So in case of credit, see, until and unless it is specified otherwise, you will always assume the transaction to be on credit basis. So when I use the word purchased machinery, it means I have only purchased. I have only purchased. I have not made the payment. I may make the payment at a future certain date, not right now. I can get a special credit for this, which is actually happened in this case. So if it is given that only purchased or only sold, you will consider credit basis by default. I'm not talking from the point of view of your examination or your course, etc. Practically in accountancy, this is what is followed. When we say purchased, it means only purchased. Payment is not made. When we say sold, it is only sold. We have not actually received the amount. If it is a cash transaction, that means purchased machine rupees 10,000 from Mr. Supplier in cash, meaning we have paid the amount. Purchased machinery from Mr. Supplier and paid the amount to him through my bank account, through my credit card. It means you have purchased also, and that too in cash, means it is a cash transaction. You have actually paid the amount. Cash transactions do not literally mean you have paid in cash. You can pay it from your bank account also. You can have your cash in bank. You can pay from your credit card also. So if it is just given in cash, you can assume the literal meaning of cash. If it is given paid, or if it is given purchased machine rupees 10,000 from Mr. Supplier and the payment is made through credit card, it means it is a cash transaction. Payment is made, but through the credit card or through whatsoever bank account or whatsoever is given. Understanding the point? So this is the basic difference. When I say purchase or sale, by default go to credit until and unless the transaction specifies cash. Right? Applicable for your exams, your course, your practical world, etc. everywhere. Same thing is applicable. Now with this, let us move on to the solution part. Purchased machine. One account is machine that is involved, one account is supplier. Only two accounts are involved. Machine is your asset. Machine is your asset. Assets are real accounts. We can trace the moment we have purchased a machine. Machine has increased. Supplier is a person. Mr. Supplier, personal account. Mr. Supplier, personal account. And if you look in terms of assets, liabilities, income and expenditure, there is no income expenditure over here. There is an asset which has increased and there is a liability. This personal account is actually a liability. Why liability? Because you will have to pay to this person, right? You are creating a liability in your books that I have purchased the machine from Mr. Supplier, which means you are liable to pay, you are bound to pay him a certain amount of that machine at a later date, right? Maybe certain, maybe uncertain, whatsoever, but you are bound to pay. You will be liable to pay the amount. Therefore, liability. And type of account is personal. So one is asset, real account. Another one is supplier, liability, personal account. Asset is increasing. There is an increase in the asset. Debit to what comes in. And at the same time, there is an increase in liability also. There is an increase in liability also. But it is a personal account. What is the rule? Debit to the receiver, credit to the giver. Who is the giver or receiver over here? We are the receiver. We are receiving the machinery. But who is the giver? The giver is the supplier. Supplier is giving us the machinery and we are receiving it and our asset is increasing. So at our end, we are recording it as an asset, increase in our asset, debit the asset account, debit machine account. We are creating a liability. Who is the giver? Supplier is the giver. Supplier's account will be credited. If you follow the shortcut, we have seen if liability increases, you need to credit. If asset increases, you need to debit. So if you see over here in this case, liability is increasing, you will credit. Asset is increasing, you will debit. Same thing in terms of rules, same thing in terms of the shortcut. So you can write down the answer for this transaction is that you will debit the machine account, rupees 10,000, and you will credit Mr. Supplier account again with rupees 10,000. Make sure you note down this particular part also. Please go through it. Let me know if there is any query and let us go on to one more transaction.
Sorry, I am repeating.
Yes, tell me.
While we are trying what is the sale into present cash,
Hmm.
as you said, it would be explicitly mentioned in the question, right? That by cash.
If it is not mentioned, you will assume on credit basis. We will see certain questions wherein I'll be giving you those questions in such a way wherein cash is involved, so that it is clear as far as exam is concerned what kind of a questions or you can say words you will get. And as far as practical thing is concerned, it is up to your, you can say, logical understanding how you're able to understand that transaction. If you're actually giving the cash, you will assume it as cash. If you're not giving the cash, if it is on credit basis, you will assume credit basis. As far as exam is concerned, you will get certain words which will be seen. Do not worry about it. Done? Okay, so let me give you one more transaction. As usual, you will try first, then we'll check it out, right? Salary for the month of April, rupees 5,000 recorded for Mr. Z. Go for it. Try. Aditya says salary account credit, Mr. Z account debit. Okay. Salary to Mr. Z. Okay. Any other answer? Now see again over here, specifically I'm telling this point for those students who are getting confused. It is just said salary is recorded. We are not saying that amount is paid for it. I can have another transaction which can say paid Mr. Z, paid Mr. Z rupees 5,000 from say some HDFC bank account. Say from HDFC bank account. Now these are two separate transactions. What happens in the practical world, as you all are aware, suppose when we talk about the April month, so this salary, when we talk about April, it is from 1st to 30th of April, right? So on 30th of April, this amount is getting due. The employer shall pay to the employee, but it is not usual as it happens. What happens usually is that maybe 5 days afterwards or maybe 10 days later, the amount is actually paid. So let us assume on 5th of May, the amount is actually paid. This is one transaction. This is another transaction. If it is given to you salary paid directly, in that case, you will debit another account, credit another account. That also we will see, direct part. But this is what is on credit basis again. As we have seen, purchase and sale on credit basis, this is what actually happens in that case also. So we'll have two different entries. One for recording the salary, another one for recording the payment, right? When I say salary, I am meaning that the employee is providing some certain services to the employer and we are recording those services, right? That is what we are recording. For those services that the employer is getting, the employer is bound to pay some certain amount that is paid over here. So two different entries. As far as the first transaction is concerned, guys, please tell me what accounts are involved. You have salary account, you have Mr. Z account. As far as second is concerned, you have Mr. Z account and you have bank account. Easy to identify, right? There are transactions where there are you can say very much complications. It is a difficult job, challenging job to actually find out the a number of accounts or types of accounts. But those are not a part of our course right now, right? Practically also, these are the transactions which usually happen. Rare courses you do have that kind of transaction. So do not focus upon how we will identify the accounts, how we will check out what kind of transaction it is. These are only the kind of transactions which will be appearing to you. Practically also as far as exams are concerned. So when I say salary over here, salary is expenditure, nominal account, right? So it is expenditure and the type of account becomes nominal in this case. Mr. Z is what is your liability in this case, and it is a personal account because he's a person. Same is over here, liability personal. Bank is your real, or you can see your asset. In the first case, salary is expenditure. Expenses have increased. Expenses have increased. So when expenses get increased, what you do is you debit which account? You debit the expenditure account. As far as nominal account rule is concerned, debit all expenses, credit all incomes. So for this particular transaction, you will debit salary account, whatsoever the amount is. At the same time, you are creating a liability. Technical method. Liability increase, you need to credit. So you will credit over here. Credit Mr. Z account. As far as rule is concerned, debit the receiver. We are the receiver. Who is the giver? Mr. Z is the giver of services, not of amount. We are talking about services over here. We are talking about salary. Amount is over here, right? So you will credit Mr. Z's account, right? What happens in the next case? Who is the receiver now? Mr. Z personal, debit the receiver, credit the giver. We are giving the amount. We are the giver. He is the receiver. So you debit Mr. Z. Debit Mr. Z account. Or if you apply the technical rule, the T formats which I have shown you, mechanical formats, in that case, what happens is liability is reduced. You debit. So liability was increased over here, you credited. Liability is decreasing over here, you will do exactly opposite, debit. As far as asset is concerned, debit what comes in, credit what goes out. Your bank balance has reduced, your balance has flown out, or your asset has reduced, so you credit. So credit HDFC bank account. Before you note things down, let me tell you one more thing. There can be a direct shortcut also. A shortcut is also possible. If you see in this case, you're debiting salary account and you're crediting bank account. This is what is happening. As far as this credit is concerned, it is getting an equivalent debit also over here. So if you are crediting Mr. Z with 5 rupees, you are debiting Mr. Z with 5 rupees. End of the day, it is 0. You are just nullifying this particular Mr. Z. Once you credit, another time you debit. What is the actual thing that is happening? Actual thing is you are debiting salary and you are crediting bank. So if both the transactions were supposed to happen on a one single day, you can directly go with this part. Debit a salary, credit bank. Or if it is given to you, salary is paid to Mr. Z. This is the only transaction that is appearing. Salary paid to Mr. Z rupees 5,000. 5th of May. You go directly with this. So direct, shortcut. But ideally, if it is on a credit basis, you are receiving these services at a later point of time, you are paying for it, you will follow this particular thing. Just to have a note of the transaction. Because the month is changing, the period is changing, right? Please note down. Let me know if you have any doubts. I'll show all the 3 slides one by one. Any doubts till now?
No.
Okay, let me give you a few transactions. Please try to solve them. I think so 3 or 4 transactions we have already seen till now. Let me give you a few more. Please try to solve them. Number 1. Sales recorded rupees 5,000 for today. Sold goods to Mr. K rupees 10,000. 5 transactions on the screen. Please try to solve them. You can take 5-7 minutes.
The third one.
Third one is sold goods to Mr. A rupees 200 in cash.
Fourth also.
Fourth is telephone expenses booked for the month of April, rupees so and so from Airtel. Rupees 20,000 borrowed in cash from Mr. Rock. Aditya, what about the first one? Okay, okay. Any other answers? Those who are not able to do it, you can try it out once again, maybe today. Tomorrow we are meeting at the same time. We'll first look at these 5 transactions and we'll move on to further practice questions tomorrow. Okay. If possible, we'll go on to preparing ledger accounts also tomorrow, because I think so we hardly have 3 more days. So if we start ledger accounts tomorrow, it will take another 2 days to practice. So we'll go in that way. Chalo, we'll stop for today. Take care. See you all tomorrow. Okay, let us start immediately. We have already wasted quite a lot of time. So yesterday we had seen these 5 transactions and I think the solution discussion was pending. So if I talk about sales recorded for 5,000 rupees for a particular day, say for today. So in this case, what would happen exactly is that this can be either on credit basis or on cash basis. Cash is not specified, so we will consider by default as credit basis. In that case, you can write down, say sales account is credited. Why? Because sales is your nominal account. Income is increasing, so sales accounts will be credited or income account will be credited. And debit, you can create debtors account. Debtors account meaning customers from whom we are going to receive the money in the future. So that is how you can go for this particular transaction. If it is in cash, then cash account will be debited, sales will be credited. If it is written for today in cash, in that case you will do that way. So here say debtors or sundry debtors account, you can debit and you can credit the sales account credit. Next one is sold goods to Mr. K for 10,000. We have sold, we have not received the money. We have only sold goods, right? So Mr. K is the person who will be giving us the money. He is asset for us. Debit the receiver. He is receiving the goods, right? So again, Mr. K account debit and sales account credit. Then you have sold goods to Mr. A, rupees 200 in cash, right? In cash means now what will happen? See, the name of the customer is also given, in cash is also given. two things that can happen. I'll explain both the points. Number one, cash account debit, sales account credit. Number one. Number two, what is the name of the person? Mr. A. So say Mr. A account debit and sales account credit. Plus there will be one more entry wherein cash account debit and Mr. K account credit, because he is the giver of the money. So any which ways is fine. You can go with these two entries wherein you can trace Mr. A account. If not, you can directly go with cash, because ultimately you are receiving cash. So both ways is fine. I'll show it to you if you wish to write it down later on. Then telephone expenses booked. You're only booking the expenses. You're not paying for the expenses. And you are receiving the service from Airtel. So you should create a liability and the expense should be debited. So in this case again, say telephone expenses account debit, Airtel account credit. And lastly, you have your borrowing money, means you will be paying the amount later on at a future point of time. And you're borrowing, you're receiving the amount in cash. So you have received cash, your asset is going up, cash account debit, and borrowing from Mr. Rock. So say Mr. Rock account credit. This is how your entries would be. I'll show this part first and then I'll show you that part also. Please note it down if you wish to. And let me go to the format part. How the format of a journal appears actually. How do you write it as far as exam is concerned, or how does the digital accounting part also work? We'll check that out after this. Are you able to understand things, whatever we are discussing? Okay, Aditya. Aditya, you are from non-commerce background, right? Okay, okay, great. So is the whatever things we are discussing, are they worth? You are able to understand things much better than what was earlier? Okay, chalo, superb. So I think you are the only student who's attending right now. I don't know why so many students registered then for the course. Okay, let me know if you're done with this. Let us go to the proper format. What is supposed to be followed?
Yes, sir. I'm done.
Okay, okay. Now see, when we talk about a particular entry, as far as physical books are concerned, or as far as digital accounting is also concerned, the format remains the same. Do not note down anything, just please pay attention. So suppose this is your paper or this is your book right now. You write down the title as say journal entries. In whose books of accounts are you actually doing this? Suppose it is our business, say Messrs ABC and Company, for example, ABC and Company, or say ABC and Company Limited. Then you write down financial year over here, say for the period, or say financial year 2021-2022, for example, and then you write down journal entries. This will be the heading. Then over here, it is the date, or as far as exams are concerned, serial number, if there is no date mentioned. Then you have particulars, wherein you will write down what is the transaction actually. You usually have a ledger folio over here to give the reference. I had talked about it 1 or 2 days before. So this we are not writing down right now because everything is computerized. Then you have debit, which is in rupees obviously. Then you have credit, again which is in rupees. So in this way you have 4 columns that you need to prepare. And suppose if we are writing a particular entry, say for example 20,000 borrowed in cash, so we are writing say cash account debit, leave a bit of space over here to Mr. Rock account. Say the date is 1st of April 2021 and say the amount is 20,000 over here debit, 20,000 over here credit. Also you write down something over here, say being amount borrowed in cash from Mr. Rock. This is called as the narration. This part is called as narration. Let me explain you what are these things. See, company's name, year or the period for which the entries are being passed. What is the exercise that we are doing? So say journal entries. So we are writing down journal entries over there. And then the format. Cash account is being debited, Rock account is being credited. Number 1, what we were following till now, cash account debit, Rock account credit. You can follow that format. Not a problem. Number 2, what I have written over here, cash account debit to Mr. Rock account. Now, the theory of debit and credit is what we have understood till now. This is also replaced with by and to. To and by is again a certain theory, a certain language which is used in place of debit and credit. To and by. Even today people use. So few people use debit credit, few people use to and by. And that is the reason instead of credit, we are writing to Mr. Rock over here. That means you debit cash account, you go to Rock account and you credit that account. Understanding the point? So 20,000 debit, 20,000 credit. If you do not understand the language of to and by, not a problem. You can directly write cash account debit, leave certain space, Rock account credit. Why? Because they are differentiated. That is why the space. This narration is for those people who will be reading your book, but they'll not understand anything because they do not have any background of accounts. For example, an engineer, a doctor. If they'll read their books of accounts which you have prepared for them, they'll not be able to understand what is this debit, what is this credit. As was the situation with you before you started attending the accounts classes, right? So 2 months before, 3 months before, whenever you started attending accounts, you were not aware of debit and credit. You were totally confused. In the same manner, there are many people who are not who do not have any basic knowledge of accounts also. So for those people, what the transaction is actually, what we have recorded is what is given in narration. And therefore narration is important. So simple English language mein you have to write down what is the treatment that you have given for a particular case. If date is given, okay. If no, serial number. Narration is written only in the particulars column. You will not use the whole page for it as far as your exam things are concerned. Practically, it has a separate section on the computer or in the software. So this is how your journal entry appears. Let me tell you one more thing and then you can note this down if you wish to. Double entry bookkeeping system. Double entry bookkeeping system of accounting. When we say double entry, it means also that there may be something called as single entry. There may be also something called as single entry. Now, what is double entry first? Let us check this part. Double entry means for each and every transaction that happens in business, there is a credit effect and there is a debit effect. So whatever entries we have seen till now, 10, 12 entries, whatever we have understood till now, in each and every entry, we debited a certain account and we credited a particular account. So there was a debit effect also and there was a credit effect also. Double entry bookkeeping accounting system says that there is an equivalent effect of debit for every credit and there is an equivalent effect of credit for every debit that is happening. So if you debit a particular account, you have to and you must credit at least some account, not any random account, obviously as per the rules. But there is debit also, there is credit also. Both the things happen. And that is what is double entry bookkeeping system. The only objective being accuracy. Accuracy of calculations. If you are debiting a certain account, say you are debiting cash account, you are crediting Mr. Rock account. You will be easily able to understand who is Rock. Rock is a borrower. So we have borrowed money from him. Where have we borrowed money? We have borrowed in bank, or we have borrowed in cash, or we have purchased some instrument out of it. You'll be able to trace. Number 2, there will not be any account wherein you will write down some wrong entries, or maybe any account where you have by mistakenly debited something or credited something. There can be no single debit or single credit. There has to be one debit for every credit, one credit for every debit. Only then your books of accounts will tally. We will check out what is trial balance and how is it prepared. Maybe tomorrow or on the last day after tomorrow, maybe we'll check it out. And in that particular scenario also, you'll be able to understand why accuracy is very much important. As of now, when we talk about Indian accounting system, as of now, there are many states which have their government accounts prepared as per single entry system. And if at all, even in the digital accounting system, even if you follow single entry, still there are chances you will end up with many mistakes. But those mistakes are easily bypassed and solved automatically in case of double entry, because there is equivalent effect. So just remember this point as for now. As and how we solve more questions or we reach to the point of trial balance, you will be able to understand the importance of double entry system more clearly, right? Please note down this format and let us go to preparation of ledger accounts, right? If you have any doubts, please let me know. Okay. Okay, so let us move ahead and understand what is a ledger account and why do you prepare it, how do you prepare it, right? Please pay attention, whatever we have seen till now, this particular thing will be totally used, and using that only we'll go for the accounting part. So we have finished off the journal entries, we'll go to the ledger accounts. If we are able to complete it today, tomorrow I'll go to the trial balance, right? And maybe day after tomorrow, as we have a last class, we'll go through the one question wherein we'll do all of the 5 things for one single question, maybe 5-7 transactions, 10 transactions, so that you easily understand that how exactly a business is accounted for, or the transactions of a business are accounted for. Please pay attention. In case of ledger account, as of now, even today, we follow the T format system in many cases, at least for proprietorships, small partnership firms, MSME people, not for companies. For companies, we have a vertical format, and at least that is used for balance sheet, profit and loss. Otherwise, they also can follow T format. What exactly happens on a T format? We have already seen. You have a debit side, you have a credit side, right? You have a debit side, you have a credit side. As far as the format is concerned, again, say Messrs ABC and Company Limited, for example, you have your financial year in place, say 2020, 2021, and you write down, say, ledger accounts. And as far as this particular account is concerned, you will write, now suppose this is cash account, so you write, say, cash account. You need not write debit credit the way I have written. What you need to do is, I'll tell you, you will have to prepare one date column, one particulars column, and one amount column. One date, one particulars, and one amount column. This is date, this is particulars, and this is amount. And this amount is debit. This amount is credit, or you can write rupees. This is particulars, this is date. If date is not there, you can go with serial number. Now what happens? Suppose we'll take the last transaction, which was cash account to be debited to Mr. Rock, 20,000 rupees, right? This was the last transaction. So we have two accounts. We have cash and we have Mr. Rock. We will prepare both the accounts. Suppose the date is 1/4/21. Now over here, on the debit side, cash account, we are on the debit side. What is the entry? Cash account debit to Mr. Rock. We will write down to Mr. Rock. Amount 20,000. Please pay attention. Number two, we will prepare Mr. Rock account. We'll prepare Mr. Rock account. Again, the same format. I am doing it directly now. Over here, say it is 1/4/21. You'll write down buy cash. You write down buy cash 20,000. So just try to understand. Cash account, we are supposed to debit the cash account. We have written on the debit side 20,000. We are supposed to credit Rock account. We have written on the credit side 20,000. Independently, if you just talk about Mr. Rock account, on the credit side 20,000 has appeared, meaning there is a liability and we need to pay Mr. Rock 20,000 at a later point of time. But for what exactly? Why will we pay him 20,000? And that is where this particular thing comes into picture. By cash, meaning he has given us some amount in cash, that is 20,000. To confirm, you need to go back to cash account. You go to cash account. Oh yes, Mr. Rock, he has given us 20,000. So on the debit side of cash account, you will write down to Mr. Rock because you are crediting Mr. Rock account. And on the credit side of Mr. Rock, you will write down by cash because you are debiting cash account. So for ledger accounts, we usually follow the system of to and by. You can follow debit and credit, not a problem. Not a problem. You can write down over here debit cash. You can write down over here credit Mr. Rock. But if you follow to and by, more convenient. You won't lose marks. Practically, both of the things are correct because logically, if you see, there is no difference, right? It is just the way of writing, nothing else, the nomenclature. Okay, so this is clear. How do we prepare ledger accounts? If you are supposed to debit a particular account, you go to the debit side of that account, create that account, go to debit side, write down about it. And in the particulars, to which account are you crediting? You will write that account, right? Now suppose there is one more transaction on 3rd of April and that is on the credit side of cash. You will not write over here. You will leave this part and you will write over here. Why? Because first ke baad you come down on to second or third and then write. First ke samne you will write only first if it is there, anything. Third, then again fourth, then fifth, go one by one down the line. Clear? Aditya, understood?
Yes.
Chalo, great. Please note down these formats, both the formats, and whatsoever journal entries we have done, let us try to prepare ledger accounts for them. So if you're done with this, noting these down, you can go to the previous transactions. I'll also do it one by one. Even if you're confused, you will get more clarity once we solve few more transactions. Please go for it. Okay. You can go to the previous questions and you can try solving them. I'll just move on to them in a minute. Let us go through the previous transactions. I think so on day one, we saw cash deposited in SBI bank. Now do one thing, just prepare a cash account separately. Whatever cash transactions come in, we will debit that account. And prepare a bank account separately. Whatever bank transactions come in, we will debit the or credit the bank account. Check. So this transaction, cash deposited in SBI bank. You can do it without the format also, or you can follow the proper format. However, if at all when you have your regular classes, I think so ma'am will teach you with the format part only, and in exams you will need to follow that, right? So say cash account, I'll just prepare over here. I'm preparing without following the format just to show you the transactions for reference purpose. Let me also prepare bank account. If you have two banks, I think so we may have HDFC bank also, and this is SBI bank. You can prepare two different bank accounts. So the entry was SBI bank credit and cash deposited in bank. So cash is this thing. So suppose this is 1421. It is to bank account. Say 10 rupees, for example. Over here, you will write down 1421 by cash 10 rupees. Understanding the point? What I'm trying to do? If done with this, move on to the next transaction. Leave some space, 5-7 lines, and move on to the next transaction. Open the account. Every time you get a new account, debit, credit, whatever is there, you can start doing it, right? So see, as we have considered the first step as journal entries, so we have a ready-made material in front of us. Use it, debit, credit the particular account. Just give the effect. Move on. Tomorrow we will see how do we close these accounts. How do we tally these accounts? There is something which is called as tallying the accounts. We will see that tomorrow. Once we tally, we are able to move to trial balance. We are able to prepare profit and loss. We are able to prepare balance sheet, which we will learn tomorrow. Once that is clear, day after tomorrow, we will solve one question wherein all the concepts in 5 days, whatever we have learned, we will put in over there. Check out, please. If you're done with this part, please move to the next question.
So for the next question, which is purchase machine for rupees 10,000.
Hmm.
Mr. Sabru.
Correct.
It will be in machine side, you will debit and write to Mr. Supplier, and on the supplier side, it will be by credit.
Perfect. Doesn't matter what kind of a balance sheet you are checking out, what kind of a chapter you are studying in any accountancy part, or whatever type of transaction you are trying to study. If you are clear with debit and credit, you will be able to understand everything. You will require time maybe to understand a particular new concept, what is done, what is the calculation. But if debit and credit is clear, you will get it right. So in this case, if machine is purchased, so it will be to supplier, whatever is the amount, and over here it will be buy machine. Please go on to the next transaction. I think we have 5-7 transactions. We have enough time to do it. If time permits, I'll give you 2-3 more transactions to do.
For the phone expenditure book, it would be to Airtel by telephone services, right?
To Airtel by telephone services, right? Correct.
Yeah, I'm done with this.
Done with all of these?
Yes.
See, in case of salary, it will be on the salary, in the salary account, it will be to Z. And in Mr. Z account, it will be by salary, right? And then once you pay it in Mr. Z, it will be on the left hand side to bank. And in bank, it will be on the right hand side by Mr. Z. So if I talk about, say, Mr. Z in this case, let me tell you something you might have observed. First, we are doing, say, by salary. Creating a liability, you need to pay, say, 10 rupees. Once you are paying it, say this is on 30th of April, for example. If on 5th of May, you are paying it, it will be like, say, to bank account. And you are paying 10 rupees. Now, when you take the total of both these sides, this is total 10, this is total 10. And these totals are tallying. This is how you close the accounts. This is how you close the accounts. If suppose this amount is not paid and we wish to close the accounts, in that case, you need to, this is the balance and you need to carry forward this balance to the next accounting period. And in that period, you can pay and tally it off. That is what we'll be looking for. Maybe tomorrow. Then in case of sales over here recorded, in the sales account on the right hand side, to cash or by cash or maybe by debtors side on the left hand side. Same goes for these two accounts also. Telephone, you will open Airtel account, you will open telephone expenses. Telephone expenses may on the left hand side, on the debit side to Airtel. Airtel may on the right hand side by telephone expenditure. This is how you will go for. Last one we have already seen, right? I am writing down few transactions. Number one, you will go for journal entries. Number two, we will prepare ledger accounts, right? Or you can go simultaneously, both. Prepare the entry, go for the ledger. Prepare the journal entry, go for the ledger. That would also be fine. I'll write down some 5-7 transactions. Maybe in the next 20-25 minutes, we'll complete those and then we'll stop for the day. You can take a screenshot of the questions. Done with these three transactions. Aditya, if you can just take the screenshot, I'll write down the fourth one.
Just a minute.
Done?
Yes.
Aditya, please take the screenshot. I have 3 more transactions to write.
Yes. Done.
The last three one. 10 transactions in total. Take 5-7 minutes. Try to solve them and let us discuss. In case of first one, Mr. A is introducing capital. So it should be you can immediately open cash account, capital account and pass the entry. Next one is A also purchases a machine for the business. So again it will be machine account debit and to capital. Instead of capital, you can also use owner's account, not a problem. That is also fine. Then number 3 is depreciation for the machine. Depreciation is expenditure for wear and tear. We have seen. So depreciation account will be debited and the value of machine will reduce. So the asset is reducing. You will credit. So these are first 3 transactions. Please have a look, prepare the accounts. I'll also prepare it over here and we can move on to the next set of transactions. In this case, you will have cash account to be prepared. On the left hand side, you will write down to capital. You will have capital account. On the right hand side, you will write down by cash. Again, over here, you will write down by machine for the next transaction. And you will prepare machine account. On the left hand side, you will write down to capital. So from capital, you have the machinery. To reduce its value, you can write down by depreciation over here. And you will prepare depreciation account. On the left hand side, you will write down to machine. Check these out in a minute. Let us move on to next 3 transactions. Next is purchased goods from Mr. A. So it will be say purchases account debit to Mr. A. You will prepare the accounts. Then sold goods to Mr. B. So it will be Mr. B account debit to sales. Next you have received 1 lakh in cash from Mr. B. So cash account debit to Mr. B. So you'll have to prepare purchases. On the left hand side to Mr. A, you prepare Mr. A's account. On the right hand side, you say buy purchases, right? Then you prepare sales. On the right hand side, by B, you prepare Mr. B account. On the left hand side, you write down to sales. So you're creating an asset. Then B has paid you in cash. So you will write down over here by cash, and in cash account on the debit side, you will write down to B. Whatsoever is the amount. Do not check that the sales was actually of 70,000 and we have received 30,000 in excess. What is to be done for the 30,000, I'll tell you tomorrow. But as of now, just mention the amounts in the proper columns. Then we have paid 30,000 to Mr. A. So you are paying, and you are paying it in cash, and it is written in full settlement. That means you will not pay anything else. And the amount of purchases was 50,000 rupees. So please see what I'm doing exactly is, firstly, you are paying in cash to Mr. A. Your liability is getting reduced. So Mr. A debit 30,000, right? Should it be this way? And what about cash? You will credit cash 30,000.
Yes.
See, you have purchased, right? While purchasing, what was the amount? The amount was 50,000. And you are paying in full settlement, which means you won't be paying any other additional amount. So you will have to close the account. So Mr. A's account will be debited with 50,000. Now, what about credit? As far as credit is concerned, we have only paid cash of 30,000. But I had explained you, if we are receiving discount, it is our income. So to discount received or to discount account, 20,000. So on the credit we have 50, and on the debit we have 50. Our accounts get tallied. Double entry bookkeeping system. So it is 50, 30, 20. 20,000 is discount income. You'll prepare a separate account, discount. On the right hand side, you'll write down to Mr. A, by Mr. A, and you will mention 20,000 because it is in full settlement, right? Because it is in full settlement. Next one is salary 20,000 paid to Mr. F. Recorded salary debit to Mr. F. After that, Mr. F debit to cash. Because it says recorded and paid, means first we have recorded it. Next one, 2 lakhs borrowed from Elon Musk in HDFC. So HDFC Bank will be debited to Elon Musk. Lastly, we have fuel expenses. So say fuel expenditure account debit paid from HDFC. So to HDFC Bank account. Please check out. Accounts to be prepared again. Let us do it. Okay. What about the accounts? Did you prepare? So Mr. A 50,000. This will be 2 cash 30, 2 discount 20, and you'll prepare discount account over here. In discount account over here, it will be by Mr. A 20,000. In cash, you will go on to the credit side again. Then for salary, you will prepare salary account. You will prepare F account. Cash account is already there. HDFC Bank, you can use the same bank account, or you can prepare then Elon Musk account over here. And in this case, fuel expenditure account on the debit side, HDFC Bank, you already have it. Yes, is it fine? Able to follow how to prepare ledger accounts? Now,
Yes.
2 more days. Tomorrow we'll understand how to close the accounts, and day after tomorrow we'll solve one full question, and we'll go through the all the parts, all the 5 steps. Okay? Chalo. See you all tomorrow. Bye bye. Take care.
Okay, sir.
Chalo. So basically, today let me take you through the further process. Let us solve 1 or 2, you can say, cases wherein we'll be able to understand the whole process. And tomorrow we'll revise the whole part and complete one particular question with all the steps that we have seen till now. So if I take you back to what were the steps as far as a proper accounting is concerned. So we have seen that we need to write down the journal entries first, then the ledger accounts will be prepared, then the trial balance, profit and loss, and the balance sheet, of which this particular part is done with. This we have started, we have completed in fact, but one part is remaining, that is tallying the accounts, right? Now let me come to this point. Say suppose I have a cash account, right? For example, I have cash account with me. This account has few transactions. Say cash received, capital account 10,000, then say sales 10,000, then say buy purchases, we have purchased something and cash has flown out, say 10,000. Now the accounts, the ledger accounts are closed, are tallied and closed after a particular accounting period. This accounting period can be of 1 day, can be of 1 week, can be of 1 month, can be of a quarter, can be of 6 months, can be of a year. Ideally, the accounting periods in India and even outside India are considered to be for one particular year. Year may differ, like in India, we follow financial year. There are countries which follow calendar year. So those things can differ. But the period is of 1 year. So suppose if these 3 transactions happen in a particular year, and now you need to close this particular account. So how will you close? You need to take the totals. The debit side has a total of 20,000. Credit side has only 10,000. The moment I say tallying the accounts or totaling the accounts, which means both the totals should be same. That means there is a missing 10,000 over here. And this 10,000 is your closing balance. So by balance, carried down in the next year, or you can just write down by balance carried down, meaning we are taking this balance in the next year. Now what do you mean by this particular thing that I have done over here? See, when we talk about cash account, right? Cash account is what kind of an account? Real account. Is cash our asset? Yes, cash is our asset. Assets will always have debit balance. Why am I saying this? See, we have seen that we have asset account, we have liability account, we have expenditure account, and we have income accounts, right? 4 types. When asset increases, we debit. When liability increases, we credit. When income increases, we credit. When expense increases, we debit, right? When I talk about asset, when I talk about cash, you cannot say that you have a negative balance in cash. You cannot say that. It is either 0 or you have some positive balance available, right? Either 0 or a positive balance. So when I use the word asset has a debit balance, asset has a debit balance, meaning asset has a positive balance on the debit side. Balance will always be on the debit side. If the balance is on the credit side, it means you have a negative balance, and you cannot have a negative balance for any asset. You cannot say I have -1 computers. You will always say I have a computer or I have 0 computer, right? I have a machine or I have 0 machines, or I have 10-15 machines, whatsoever. It cannot be I have -5 machines. That cannot happen, right? In the same manner, it is applicable for the cash also. So all type of asset accounts will always have a debit balance. All types of liabilities account will always have credit balance. Expenses and income do not have balances. See, I'll tell you why. When I talk about asset, meaning you will receive the amount in future. When I talk about liability, it means you are liable to pay the amount in future. You will receive or you will pay. Now, suppose if we talk about financial year 2021 and 2022 on 31st of March, 31st of March 2022, we are closing our books of accounts and we have an asset of 10,000 rupees, meaning we will get the benefit from that particular asset up till 10,000 rupees or of 10,000 rupees, right? If I say I have a liability to pay so and so person 10,000 rupees on 31st of March, it means when we go into next financial year, the liability won't vanish away. The liability is still there and we will still be required to pay the amount. Understanding the point, right? But when we talk about expenses and when we talk about incomes, this expense or this income is for a particular year, for a particular financial year. The year passes away, the expense or liability is gone. We use these expenses and liabilities and transfer their balances to the profit and loss account and calculate profit or loss, whatever it is. So we understand, yes, these are the incomes, these are the expenditures. We take them at a single place in a single account, which is called as profit and loss account. And accordingly, we calculate our profit or loss, whatever it is. So when we talk about assets and liabilities, we close the accounts and we carry forward the balances. When we talk about income and expenditures, we do not close the accounts. We transfer the balances to profit and loss account, take it one single place, calculate the profits, calculate the losses, and transfer those balances to your assets or liabilities. I'll just explain that point once again to you over here. See, we have assets, we have liabilities, we have income, and we have expenditures, right? Everything in accounts revolves around these four things, and that is what we have seen till now. As far as assets and liabilities are concerned, we close accounts, close respective ledger accounts, and carry down or carry forward the balances. And after carrying down or carrying forward these balances, we prepare a balance sheet. If you remember, I had told you we show the position of our business in the balance sheet. So we are able to understand to a certain extent, to a certain point, as to what are the total number of assets available with us and what are those assets, and in the similar manner, liabilities. When we talk about income and expenditures, we close accounts, close respective accounts, and transfer the balances to the profit and loss account. And with this, we prepare our profit and loss account or statement, whatever it is, or whatever you call it. We understand profit or loss, whatever it is. And if it is a loss, we are, as a business, liable to recover it in the future. And whenever the profit is generated, we are liable to pay that back to the owner. So if taking money from owner is a liability, the profit that we have earned in the business is also a liability that we are supposed to give to the business. So this profit or a loss gets transferred to the balance sheet indirectly at the end. How does that happen? We will check that out also, right? Have you understood this particular part? I request you to please note this down. Prepare a cash account, this kind of a thing. Just try to close it down. After that, please write down this part also. I'll show both the things to you. Do not take screenshots. Please write it down because we'll be solving few things based on this particular concept. Guys, done?
Yes, sir.
Now, what is a trial balance? Before going to, after closing the accounts and before going to prepare the balance sheet and a profit and loss account, we do one exercise which is called as a trial balance. And that is the only motive of trial balance is just to understand the accuracy, arithmetical accuracy of whatever entries we have done. So whatever this double entry bookkeeping system of accountancy that we are following, whether we have debited and credited the accounts correctly, just to ensure the arithmetical accuracy, we prepare the trial balance. What exactly is a trial balance? Do not write down, just please understand. So say we prepare it in such a way, we have particulars over here, that is the name of the accounts. We have debit rupees and one column for credit rupees, right? So we have basically 3 columns over here. Now we have seen that all the assets and expenses will have debit balances. All the liabilities and all the incomes will have credit balances, right? So whatever accounts we have, suppose we have cash account, we'll write down its balance over here. We have say capital account, it is a liability, we'll write down the balance over here. We have sales account, income, we write down the balance. We have telephone expenditure account, expenditure, we write down the balance. So whatever total balance you take, see, in case of expenditure and income, the amounts that you were about to transfer in the profit and loss account, those amounts will be written here in the respective debit or credit column. As far as your asset or liability is concerned, you have closed the account and you have carried forward the balance, and the same balance is appearing in your balance sheet. The same amount will be appearing over here also. And what happens at the total, after writing all the assets, liabilities, income, expenditure, you take the total. If this is X, this also is supposed to be X. If this is 1 lakh, this is supposed to be 1 lakh. If there is any discrepancy over here in the total, if the total of the debit side and the total of the credit side is not matching, in that case, you need to go back to the accounts and check where you have made a mistake, correct it, come back, prepare the trial balance once again, and then you can move on. Ideally, when we talk about computerized accounting, if there is any, you can say, mistake over there, the moment you are passing the journal entry, the computer will pop up with the error over there only and will ask you to correct it. It will not wait for you to go back to the trial balance and check it out. And trial balance is always tallied in case of computerized accounting. It will not show any sort of balances, because even if there is an error, you are correcting it at the very particular moment only. If you do not correct it, the error will appear, you can correct it and come back. But it is very automatic. In case of manual thing, you will have to prepare it again. So basically, this is a trial balance. Do not note down. You can just write down if you wish to the format, asset liability on which side, income expense on which side. After this, let me give you one question and let us try to solve it. If you're done with this, please let me know. Okay, okay. Yes, guys. So we have seen 5 steps: journal entries, ledger accounts, trial balance, profit and loss, balance sheet. We have seen how to write down the journal entries, debit, credit with the proper format. We have seen how to prepare the ledger accounts and how to close them, and how do the balances get transferred to the profit and loss account and the balance sheet. At the same time, why do we prepare trial balance? Now, practically, how does step 3, 4, and 5 work? For this, we'll have to take one question, wherein first I expect you to complete steps number 1 and 2. I'll do it over here also, no doubt about it. But I'll give you first few minutes to solve. Once you're done with first 2 steps, we'll together do the step number 3, 4, and then 5. Right? In this manner, you'll be able to complete the whole part and understand the how does the whole accounting work. Right? So these are the 10 transactions in front of you. A very simple kind of a question. Let us try to complete this one. Right? Please start with the journal entries. Make sure you're using the proper format and doing it, because you will be required to do the formats as far as your exams are concerned. And if you want me to go through the format that you have drawn, I think so the chat supports the image format also. You can send it to me over here. Otherwise, you can send it to me on my WhatsApp. I'll share the number over here, right? So that I can just go through if you are doing it correctly or no. Please start. Take 5-7 minutes. Try to write down the journal entries. Maybe simultaneously the ledger accounts also. Or first you can go for the one journal entry and then one ledger account, or maybe all the journal entries and then all the ledger accounts. Please start. If you get stuck at any particular transaction, leave some space and move ahead, and then you can ask me at the end. Are you able to do it? Are you doing it actually?
Yes, sir.
Okay, okay. You can assume the either ways. If you wish to assume it cash, not a problem. If you wish to assume it credit, not a problem. Okay, let us check out the journal entries as well as the ledger accounts also before moving on to the trial balance part. See, when you get such kind of a question, you have to check out that whatever payments they have told that you have made, it is not written that it is from cash or it is from a, you can say, bank account or something. We have bank account also, we have cash also. So you will have to go through the transactions and try to understand whether you have sufficient cash. If yes, you make cash payments, not a problem. If you have sufficient account balance in the bank, you go with the bank account also. That should not be a problem. So it depends on what kind of a transactions are given to you. Practically, whatever situation is, like if you have a balance in cash, you use the cash balance to make the payments, right? Let us start. So in the books of Mr. M, for whom we are recording, journal entries and the period, you will have to prepare 3 columns or 4 columns maybe. One is date or serial number. First entry was Mr. M started business with cash, rupees 50,000. So cash account gets debited, capital gets credited. We have the narrations, right? I'll just quickly take you through and then maybe give you a minute or two if you wish to take the photo or maybe note it down. I'll be sending you this PDF file also, so you can check it out later on also. Second one was deposited in bank account rupees 1,000. Obviously, you're depositing cash, so cash gets reduced. Credit cash account, debit bank account, because bank balance gets increased. Number 3 was you have purchased computer rupees 30,000. So computer purchased from local vendor in cash, right? I have assumed it is paid in cash over here. You can assume the other way also. As far as we'll go for trial balance and profit and loss and balance sheet, we'll follow this particular thing. If you have done other ways wrong, not a problem. You will assume that and you will prepare the accounts. Won't be an issue. Then purchased goods from Mr. K, rupees 5,000. So purchases account debit and Mr. K's account credit. Then you have goods sold to Mr. H, 2,000 rupees. So sales is credited income and debit the receiver, credit the giver, right? So he is the receiver, Mr. H account gets debited. Number 6, furniture purchased from R. You're purchasing furniture from R at the whatever 10,000 rupees. So furniture account is an asset, gets debited, credit the giver, R is account is credited. Then you have commission received 2,000 rupees. You have received it. So you have received means it is a cash transaction or bank maybe, but you have received the money. So cash account debit and commission credit. Number 8, you have rent paid, and then number 9, you have salary paid. That means you're already paying it. So we have assumed cash over here. You can assume you have paid from bank also, not a problem if your bank has sufficient amount of balance available. So rent debit, salary debit, 2 cash, 2 cash. Lastly, you have amount received from Mr. H, 1,000 rupees. So cash gets debited and H gets credited. In this case, maximum number of times I have assumed everything is in cash only, not through bank. So it depends. If you have balance in bank, you can assume that also. Please quickly go through all the transactions. First 6 are appearing, rest 4 I'll show it to you. And let's quickly move on to the ledger accounts part. Number 7 to 10. Okay, let us move on to the ledger accounts. I think so. I'll just keep it open. You can just go through your accounts. Maybe I'll take a pause over here so that you can just check if you have mistaken somewhere, you can correct it. If you have some doubt, you can ask me, and then I'll scroll it down. Maybe after that, we'll go on to trial balance immediately. Please check the entries also. So like capital account transaction was first, it is written like serially before the bank one, and then you have computer, then you have commission, then rent, then salary, in that way. Could I scroll down?
Yes, sir.
Next three accounts. KHR and furniture account. in the last three accounts. Yes, guys, done?
Yes, sir.
Okay. Now see, as we have discussed, once we are closing all the accounts, whatever accounts are there, we need to first understand what is asset, liability, income, and expenditure. So like asset is cash is asset, then liability is your capital, bank account is your asset, you have computer as asset, purchases as expenses, sales as income. Mr. K's account, you have purchased from its supplier, so you have a liability, but the balance is okay, the balance is there. Then H, you have sold, so asset, debtor. R again liability, this is your asset again. Then expenses, your income and your expenses. So we have all the expense, income, asset and liability at place. Let us try to prepare trial balance. What to do? Prepare the format as I told you. Trial balance format with 3 columns. Write down all the assets first, then write down all the liabilities. Maybe then you can go for all your incomes and maybe then for all the expenditure. Write the name of the account over here and the closing balance. Name of the account and the closing balance. Name of the account and the closing balance. Name of the account and the closing balance. What is your closing balance? These balances that we have done. So for this asset account, you'll write down furniture, you'll write down 10,000. You'll write down Mr. R in case of liabilities, you'll write down 10,000. Say Mr. H in this case, you will write down an asset and you will write down 1000 rupees. You will write down K 5000. In this way, you will write down all the accounts in the trial balance. I'll keep this thing over here only so you are able to draw the format and follow it accordingly. Try to take the totals once you are done. These totals that you get, if this is X, this also should be X. Write down first. I'll show you the actual answer then. I am over here only. If you have any doubts, ask me on real time basis so that you are able to do it right now. Even if you do not wish to club all assets, liabilities, income, expenses together, not a problem. As and how you have prepared the accounts, just write down the balances. Just make sure, even by mistakenly also, you do not write down asset account over here and you write down the balance and liabilities. Your totals won't tally then. So for assets and expenses, debit side, liability and income, credit side. I'll just mention it over here. So you will have, say, asset over here, you will have liability, you will have expenses, and you will have income. This is your debit side, this is your credit side. You have assets, you have expenses, you have liabilities, and you have incomes. Please start. Guys, done?
Yes.
What is the total that you are getting?
I do think.
Oh, what is the total? See, all the balances we have to just incorporate, simply incorporate. If you're getting 69,000, then it is fine. So we had cash, then capital, we had bank, computer, purchases. We have marked assets in front of these. Just take down the balance and put it over here. In case of sales, so if you have closed the accounts correctly, you will be able to get this correctly. If you get a difference over here, it means you have not closed one of the accounts properly, or maybe there is a clerical error wherein you have not written down the balances over here correctly. Just check the balances now. If you are able to write down all the balances correctly, if no, mark it in your book and just go to that particular account and check it over there. If the closing of the account is not done correctly, and let me know, I'll help you out to close the accounts correctly. We come back to the trial balance again. I'll keep the screen as it is till then.
Yes.
What was the mistake, Aditya?
But can I really try to the balance is very total.
Okay, okay. So this is how you prepare the ledger accounts, write down the journal entries, you go for the trial balance. Now what you can do is, see, I'll just tell you what is to be done after this. You can try it today. Maybe we'll do it together tomorrow. Once you're done with the trial balance, you have all your balances in place, right? You need not go to the ledger accounts again. You have all your balances over here. And if you have categorized it already into asset, liability, income, expenditure, well and good. Just prepare two formats, one of profit and loss account in this manner and one for the balance sheet, rough formats. We'll check out the actual format tomorrow. This side you have incomes, this side you have expenses. Write all the incomes over here, write all the expenses over here. If your income is more than your expenses total, that means you have a profit. If it is vice versa, that means you have a loss over here. Take the totals. These totals should tally whatever is the difference is your profit or loss, right? Write down all the assets on the left hand side of the balance sheet format and liabilities on the right hand side. So say you have 1, 2 and 3. You have 1, 2 and 3. Again, the total should tally. This and this should tally. If you have profit and loss account, whatsoever it is, you have profit or you have got loss. You have capital to be written over here under liability. Say capital balance is 1000. If you have loss, reduce the balance. If you have profit, add the balance. And then it will be your new balance of capital. After adding this particular profit or loss or reducing it, you get this X as equal to this X. This is how you prepare the profit and loss and balance sheet. This is the overall idea. I'll just keep it over here. Just take a photo. Maybe it will help you to guide how to do it. You can try it if possible today or maybe tomorrow before the class. Tomorrow we have the last session. We'll understand these parts, maybe 20-25 minutes, and we'll revise the whole part. If possible, I'll give you one more question to solve. We'll try to do it together. Or maybe you can take it as an exercise. I'll share the answers with you. Right? Please go for it. After this, we stop. If you have any doubts, please let me know. Done? Okay, so we stop with this. We continue tomorrow. Okay, so see, let us just quickly understand what we had done yesterday. Yesterday we had tried to prepare the trial balance, right? And this is how we had prepared it. I had told you to try the profit and loss and the balance sheet, if possible, at your end. And Aditya, yes, were you able to do it? What was the revised amount of loss or profit that you got?
No, so yesterday.
Okay, so this part is fine. Like you have got 69,000 on the debit side, 69,000 on the credit side on trial balance, right?
Yeah, just one question.
Yes.
While preparing balance, what exactly is it that we put the difference between the credit and the debit?
No. See, the difference between the debit and credit, I'll show you 1 second. See, now suppose this is cash account, right? Cash account is an asset account. We'll write it down on the asset side, debit side of the trial balance. So cash account meaning there is a debit balance because it is asset account, means the debit side should always be higher than the credit side, and it is so. See, 53,000 on the debit side and 53 minus 21 on the credit side, so it is just 32,000 on the credit side, right? So debit side is higher. Why? Because you will always have some sort of cash available. It will never be negative. It will be either zero or it will be positive. Therefore debit balance. So this particular amount, you have to reduce it from this total. The balance is your closing balance. So as on 31st of March 2022, you have 21,000 in your hand, and this 21,000 will be the opening balance. Now this is closing balance for this period, for this particular period, 1st of April to 31st of March 2022. For 1st of April 2022 till 31st of March 2023, for that particular period, this will be the opening balance, 21,000. From that you can spend, and over and above that you can take the inflow. In this similar manner, for capital, you get closing balance as 50,000. Let us go one by one. So this is fine. Aditya, you can check the accounts along with me. You have got 21,000 over here. Let us check capital account. So you had introduced capital 50,000. This is a liability, meaning your credit side will always be higher. Remember those 4T formats that we had prepared. So whatever was on the increasing side, that side will always have a more balance. So when I say capital account has a credit balance, it means credit side is more than the debit side. So debit is 0, credit is 50,000, and this balance is 50,000. This balance will be carried forward. So this liability to pay 50,000 to the owner of the business remains as on 1st of April 2022 also, right? Then bank account, again debit side is more, credit side is less, closing balance on the credit side 1,000. Computer account, asset account, you either have one computer or more than that or 0. You cannot have -1 computers. Therefore debit side 30,000, balance carry forward. Purchases expense. You will not carry forward the balance. This is the transaction that will result into profit or loss, a component of your profit or loss. So you will transfer the balance to profit and loss. So see, in this case, what we have seen till now in all the 4 accounts was by balance carried down or to balance carried down, depending upon asset liability. But in income and expenditure, it will always be to profit and loss or by profit and loss. You will transfer the balances to profit and loss. So if it is purchases, purchase means expenses, expense means you have debit side. So debit side is more than the credit side. What is the difference? 5,000. 5,000 will be transferred to profit and loss in the similar manner for sales. Just check till this point. Aditya, clear?
Yes, sir.
Next, then you have case account. You have made purchases case your supplier, you have liability on the debit side. H, sales customer on the credit side. So see, in this case, you have 2,000 on the debit side, you have 1,000 on the credit side. Balance is only 1,000. This will be carried down to the next period. So you are still about to pay 1 more 1,000 after, or you are about to receive 1 more 1,000, sorry, in the next year. In this case, you will be paying this much amount in the next year. Then you have furniture asset either 0 or positive. You have 10,000, this side 10,000 balance. You will carry it down. So in this manner, all the expenses and assets, whatever balance you carried down or whatever balance you transfer to profit and loss account will go on the debit side or left hand side of the trial balance. On the right hand side or on the credit side, you will write down all the liabilities and all the incomes. Now just check your trial balance. I'll give you a minute. Just check it out. If there is any mistake that you have made, please correct it. If you wish to ask anything, let me know. Let us go to profit and loss balance sheet.
Yeah, my trial balance.
Trial balance is fine.
Yes.
Chalo, great. Now let me give you a few minutes to try again. Let me explain you the whole concept one more time, which I had explained you yesterday. You will prepare 2 formats now, one below the another, right? One below the another. Do not do it sideways as I have done. Keep it one below the another. Or if you have 2 pages, you can go with that. One is profit and loss, one is balance sheet. Profit and loss, left side is your debit, all the expenses. Right side is your credit, all the incomes. Basically, your profit and loss account is nothing but your nominal account. So nominal account meaning on the left hand side we use debit. Debit is all expenses, right? And right hand side credit is all income. So you will go accordingly. Whatever balances, now you need not go to each and every account. You need not go to each and every account. You have all your assets and expenses over here only. Just understand how this is asset, liability, asset, expenses, income. Accordingly, you can directly write down the amounts over here. Just put in the amounts. Expenses, income. If your income is more, and your expenses are less, you get a profit, or vice versa, you get a loss. So that will be there. Whatever side you can write down those things, total should tally. Then balance sheet, left hand side assets, right hand side liabilities, total should tally. In this case, maybe your total will not tally. Reason being, whatever profit or loss that you get from here is supposed to be added or subtracted from the capital. So capital is what? That the business will give to the owner, right? So if the business will give owner 1,000 rupees and there is a profit of 200, that profit is also supposed to be given to the owner. So you add the profit of 200 to capital. You can write down capital account so and so plus profit for the year so and so total, and then move ahead with the next liability part. If you have loss, you will reduce it from whatever amount you are supposed to give to the owner. So 1,000 minus 100 loss, 900 is the capital in that way. And just check if your balance sheet is also getting tallied. Just try, take 5 minutes maybe, and I'll immediately show it to you over here.
Okay.
Are you able to do it?
No, I'm getting the seating as expenses.
Okay, okay. Let us check. What are you doing wrong? See, let us go one by one. I'll do along with you. See, we'll prepare profit and loss. I'll just write down the amounts. You just check if you are doing it properly. So we have cash asset 21,000. So we'll write down over here 21,000. Next, you have capital. Capital is 50,000. So let us write down over here 50,000. You have bank 1,000, computer 30,000. So bank 1,000, computer 30,000. 5,000 is purchases, 2,000 is sales. So this is 5,000 purchases, 2,000 sales. Then you have Mr. K 5,000 liability. Right? It is a liability, no? H is asset 1,000. R was 10,000 liability. Then you have furniture asset 10,000. You have rent 500. You have salary 500. So this is 500. This is 500. And you have commission 2,000. Yes. What is the total? There is a loss, right? Expenses 6,000.
2,000.
So this is 6,000. This is 6,000, right? Now from this 50,000, we have to reduce 2,000 as loss. And now just check what is the total that you are getting. So 21 on the asset plus 1,000 plus 30 plus 1,000 and plus 10,000. It is 63,000 over here. Let us see 50,000 plus 5,000 plus 10,000 minus 2,000. 63,000 over here. So this is tallying. This is also tallying. Whatever loss that you have got, this loss is supposed to be reduced from the capital account. This is your capital balance. I'll just show you the model answer. Just check with the format. So this is your profit and loss and balance sheet. Just check it out.
Yes, sir. Furniture as an expenditure.
Okay, okay.
Sir, can you shift it a little bit to the left?
To the left. You want to view this part only, right?
Yeah, I mean the expenses column is not
Acha. Check now.
a little.
Fine. Do one thing, na, just on my screen, just you can click on fit to camera or something. That one function is there. You will be able to see the whole part. Just check.
Yes, sir. Yes, sir.
Got it? Able to do it?
Yes.
Great. One second, I'll just show you one more question. We'll solve that. Is the whole question visible? Just check. Transaction 1 to 20. Are you able to see it, Aditya?
No, sir, it's pretty small. Could zoom in a little bit.
1 second. I'll do one thing. 1 second. I'll be able to share the PDF file over here, right?
Yes.
1 second. Just check if you are able to see it.
In the chat, sir? No, there's nothing in the chat.
Check now.
Yes.
I think so you're able to see on the screen as well now.
Yes.
Okay. So try solving these questions. I think so you won't be able to take more time. Do not prepare trial balance, balance sheet or P&L. You can prepare, but I don't think so that will tally because the transactions are not planned in that way. We will try to understand the journal entries and ledger accounts over here again. The trial balance, profit and loss, and this part is clear, right? Balance sheet part.
Yes.
Chalo, great. Try this one. Let me know once you're done. Maybe 7-8 minutes at a max, and then I'll discuss it with you. You can prepare the ledger account simultaneously also.
So for the 16th question,
Hmm.
the royalty income received,
Correct.
it can be done. It can be cash account can be debited.
Debited. Yes, yes. Cash debit, royalty credit, or you can go with royalty credit, Miss D debit, and then you can go with the cash part. That is also fine, as you wish to do it. Not a problem.
Okay. So in the exam, it's not a problem, right? If you assume either ways.
It should not be a problem, but even though, like, you need to talk to, I guess Davinder ma'am is there, no, who is looking after it. Talk to her once about
Yes.
it.
Okay. Thank you.
In general, it should not be a problem, but then she may consider as what she has taught exactly, no. So just confirm with her once before proceeding.
It's the journal entries, the 28 questions.
Okay, okay. You want to try the ledger accounts part also? We have time because that is why I'm asking. So
Yes,
you
I
can
do
take
that.
maybe 10 minutes, just try to do it. Do not do with proper formats, etc. Just try to tally the accounts. See if you are able to close them.
Okay. In the first question, it said the invoice was raised, so and it was paid in the same day. So do both have to be recorded, or can it be simply considered that it's been paid?
Which one are you talking about? The second question?
Not yes. The second question.
Okay, okay. So no, in second question you can on the same day means the amount is also transferred on the same day, but you will have two different entries for it because it is specifically asked.
Okay.
Hmm, hmm.
Okay. Accrued means credit, right?
Correct. Accrued means the payment has not been made, nothing has been done till now. We have just made the promise to pay or to receive.
Okay. Finished it, but I have a doubt in the fifth one.
Okay.
Closing balance rupees 15,000. What exactly does that mean?
I'll talk about it. 1 second. Closing balance is 1 second. See, what they're trying to say is, see, closing cash deposited rupees 10,000 in ICICI Bank and closing balance of cash as on 31st of March 2020 is 15,000. That means opening balance of cash was also there, right? For us, it is opening balance of cash, right? So this is cash account. Out of cash account, you are depositing 10,000 in ICICI Bank, right? On 5th of, say, February. And before that, a month before that, or in this case, the opening balance is 15,000. That means you had 15,000 over here, out of which you're depositing 10,000. And therefore, for now, the closing balance becomes 5,000. Got the point, Aditya? This is the transaction that they're talking about, right? This is on 5th of February, say 21. And this is on 1st of April 2020. That means this is your opening balance, which they have written in the question as closing balance for the previous year. And in this year, 10,000 is deposited, and therefore you have only 5,000 as the closing balance for this particular year. Because the question comes, where did this 10,000 come from? How can you deposit? You do not have cash earlier. So you have got the cash from the, you can say the opening balance. You had opening balance over there, and that is the cash that is available with you. From it, you are depositing 10,000. So this is how it will appear. Getting the point? Yes, Aditya? Hello?
Yes, I'm sorry. I
Okay.
didn't-
Okay,
So,
okay.
yes, I understood this part.
Mm-hmm.
As per the rent paid to Mr. Landlord, that 10,000 had credited the cash account. So I can't do that, right?
Paid rent to Mr. Landlord. No, you can see, you cannot do that because you do not have cash balance available with you. No? You have received 1,50,000 and that is an ICICI bank. Out of that, you are paying 10,000. So you will pay it from the bank. You do not have cash available with you. So ideally, that cannot be done. Should I go through all the questions that I have given it to you right now? Let us go through.
Okay, yes.
Okay. So see, the first transaction was invoice for professional fees, rupees 1,50,000 raised on Mr. Aman, and total amount received in ICICI Bank on the same day. Meaning you will prepare a professional fees account or income account, whatsoever it is. On the credit side, you will write down 1,50,000. You will prepare Mr. Aman. On the debit side, you will write down 1,50,000. Then on the credit side of Mr. Aman, you will again write down 1,50,000. And on ICICI Bank, on the left hand side, debit side, you will write down 1,50,000. So you'll have to prepare 3 accounts.
Yes.
Correct? Next is salaries accrued. So salaries expenditure, salary account. On the left hand side, debit side, Mr. A 5,000, Mr. B 7,000. Open Mr. A account. On the credit side, buy salaries 5,000. Mr. B's account, buy salaries, credit side 7,000. Right? Then you are paying rent to Mr. Landlord, 10,000 rupees. So rent account expense on the left hand side, you may directly write down ICICI Bank or you may write down Mr. Landlord. Then if you are writing Mr. Landlord, open Mr. Landlord account. On the credit side, write down buy rent. On the debit side, write down to ICICI Bank. Go to ICICI Bank. On the right hand side, write down buy landlord and pay the rent. Or if you are doing directly, write down directly in ICICI Bank. On the right hand side, buy rent and pay the 10,000 rupees. Next, number 4, interest received on deposits from bank, interest account, credit, ICICI Bank account on the debit side. Then next, cash deposited we have seen. Lastly, invoice for professional fees, 10,000 raised on Mr. Kamal. We are raising the invoice. So professional fees or income account on the credit side, 10,000, Mr. Kamal on the debit side, 10,000.
Yes.
Okay. Is there a need to go through the journal entries also or no?
Is it okay if I just tell you what I put?
Will do. Yes, please. Number 1, capital account. What was the entry? Capital account?
Capital account credit, cash account debit.
ठीक है. Okay. Next.
Then purchases account debit, supplier account credit.
Hmm.
Then computer account debit, and the whatever case it is credited.
Okay.
Then customer one account is debited, then sales account is credited.
Hmm.
Cash account Mr. G account debit.
Hmm.
Then credit card is debit,
Hmm.
cash account credit.
Okay.
Customer bank account debit, customer one credit.
Hmm.
Then cash account debit, then customer account credit.
Okay.
Then supplier one debit, cash credit.
Hmm.
Then cash debit, capital credit.
Hmm.
And then telephone services debit, Airtel credit. Then Airtel debit, cash credit.
Okay.
Audit fees debit, MSK credit.
Perfect.
Fees debit, and either cash or Mr. M, either of those is credited.
Okay.
And 15, ICICI Bank debit, cash credit. Then cash debit, royalty account credit.
Okay.
Cash account, IPR debit,
Hmm.
cash credit. Then
Hmm.
rent account debit, bank account credit.
Hmm.
Then this is land account debit, rent account, landlord account debit, rent account credit. And
1 second. Which one? Which one? Which one? 19th one. What did you say?
I said the landlord account is debit.
No, rent account will be debited. Landlord is a person. Rent is expenditure. You have to debit rent account because you are booking the expenditure. So rent will be debited, landlord will be credited. Even in the previous one, in the 18th one, deposit for rent account will be debited because that is deposit which you are paying. You will be receiving it. And you will credit your bank or you will credit your landlord. And in 20th case, you will debit the landlord or rent. In this case, landlord in the 20th because we have booked it, and you will credit cash.
Okay.
Okay. Okay, great. Chalo, let us do one thing. Let us quickly just go through whatever we have seen and then we'll wrap up the session. So we had started with many things actually. What is a profit and what is cash, what is discount, and various other things required in business. We saw that these are three basic financial statements that we require. Then we went on to there are three different types of accounts: real accounts, meaning the assets basically where inflow and outflow can be traced; nominal accounts, income, expenditure, all the income and expenditure account are nominal accounts; personal, where there is an actual person involved. Considering these three accounts, there are three golden rules of accounting. One rule for each type of account. Nominal account, debit all expenses and credit all gains. Real account, debit what comes in and credit what goes out. Personal accounts is debit the receiver, credit the giver. If you're not able to follow those, then I had explained you this particular shortcut. Well, I think so you are able to follow the rules part right now. So this was asset, liability, expense, income. Asset, liability, asset and expenses, same treatment. Liability and income, same treatment, exactly opposite of what we did for asset and expenses. In case of asset, debit means increase in asset, credit means decrease in asset. In case of liability, credit means increase in liability, debit means decrease in liability. What next was that there are few steps. First, we write down the journal entries, then we prepare ledger accounts, then we tally the trial balance to test the arithmetical accuracy. Once that is done, we go to prepare a profit and loss, find out profit or loss, transfer it to capital, and prepare the balance sheet. That is how we have seen whatever we have been doing till now. In case of journal entries, first you need to understand whether the transaction is asset, liability, income, or expense. Once that is done, number of accounts that are involved, then those types of accounts, and then apply the rules, and then you journalize. Or you can directly find out this, apply the shortcut, and you are good to go. That is also fine, right? In case of how do you write down the journal entries? We have seen the format wherein narration is important, name of the company, journal entries, debit, credit. You can use the to by ka thing also, that is also fine. We have seen double entry bookkeeping system. Single entry, there is less accuracy. Double entry, the accuracy automatically increases because you debit a certain account and there is always a debit effect for a credit for a debit, right? We saw ledger accounts wherein 3 columns on the left hand side, 3 on the right hand side, date or serial number, particulars, amount debit on left, amount credit on right, right? You need to chronologically follow. If it is 1st of April, then 3rd of April will be a line below that. On the left hand side, while mentioning something, you mention the account to which you have actually credited, saying that to so and so account. On the right hand side, while crediting a particular account, you write down by that particular account where you will be debiting the amount. Basically, we have seen various examples over here, and then I think we had gone to understand how is trial balance prepared, how is profit and loss and balance sheet prepared. These balances, you close the accounts and transfer the balance to balance sheet. These both accounts, you transfer the balances to profit and loss, prepare the statement, find out profit and loss, transfer it to capital, whatever it is, less or more, and then you end up with telling your balance sheet also. But before this, we use a technique called trial balance to just tally if everything is fine. If it is not fine, you correct them first and then you come back to profit and loss. This is how you do the accounting treatment of various transactions that are there in place. These are the basic logics which were expected from the bridge course, and from now on you can, I think so, you'll be able to understand whatever is actually going on in your syllabus in your class, right? Okay. Aditya, if you have any doubts, let me know. Otherwise, we can stop.